OTS amount in other bank up to 24 months. If the sacrifice is percentage is up to 10%, up to 24 months from the date of clearance of the OTS, no loan to be sanctioned. If it is more than 10% up to 25%, so up to 36 months, no loan can be sanctioned. So this is a cooling period. If it is more than 25%, up to 5 years, up to 6 months, no loan to be sanctioned. This is the general guideline. And somebody is having some discretion that we are going to see. In some categories, some discretion is there. So now whether a loan can be given to a OTS settled borrower or return of borrower either in our bank or in other bank. Whether in our bank we can give loan. So that depends upon first the percentage of sacrifice. So the percentage of sacrifice, how it is, I told you, up to 10%, about 10 up to 25, about 25. If that is the case, what is a cooling period is required before after he repays the entire OTS amount in other bank or in our bank, he has to wait for this cooling period to avail a fresh loan in our bank. So this is a normal guideline. So now the discretions are done. Let us see the next slide. Loans to agriculture, loans to weaker section, and agricultural gold loan is out of the purview of the cooling period. Now, these things are kept away from the cooling period. Now, for that, what is a cooling period? We will see separately. Gold loans other than agriculture. So other than agriculture, what is a gold loan name in Canara Bank? Swarna loan. You have Sarna OD, Swarna Express, like that, whatever may be the case. Gold loans other than agriculture gold loan is also kept out of the purview of the cooling period beyond 24 months. That means RSA means respective sanctioning authorities. Respective sanctioning authorities can sanction other than agricultural gold loan after the cooling period of 24 months. When you take a CIBIL report, you find out there is an gold loan is what do you say? Gold that is gold loan is something OTS or something is taken place in other bank or written off or something like that is taken back in other bank. So the percentage of sacrifice etc. whatever it is, even though the cooling period comes beyond 24 months, that is more than 25% sacrifice means you know what is it. So even though it comes beyond that the 24 months, the respective sanctioning authorities can sanction that is loan. So if the cooling period is up to 24 months, they need not wait for before 24, after 24 months. For all loans, ED, CAC and above authorities can waive additional cooling period beyond 24 months. So for all types of loans, ED, CAC is having the power to ensure that studies or to see that they can sanction the loan even the cooling period is 25 months, 26 months. They need not wait for 60 months. So finally, no authority is empowered to waive the cooling period up to 24 months. That means a cooling period should necessarily be up to 24 months, and beyond 24 months, EDCAC is having the power to waive the cooling period. Agriculture, other than agricultural gold loan, respective sanctioning authority need not wait for more than 24 months. They can sanction the loan. If agricultural gold loan, sorry, other than agricultural gold loan, a return off or whatever you say OTS is settled in other bank. Return of accounts. What is the guideline with regard to return off? Return off amount and credit card receivables with write-off amount up to 10,000 rupees for non-willful defaulters in other banks may be ignored beyond 24 months from the date of write-off in other bank, and fresh loans can be sanctioned both for consumer and commercial segment. So if the write-off amount is up to 10,000 rupees, so that is up to 24 months from the date of write-off, you wait. Afterwards, the loans can be sanctioned. No loans to be sanctioned to commercial segment where write-off is beyond 10,000 is reported from other banks. I told you, write-off up to 10,000 rupees, both for commercial and consumer segment. You wait for 24 months, then you can sanction the loan. But no loans to be sanctioned to commercial segment where the write-off amount is above 10,000 is reported from other banks. Loans can be sanctioned to consumer segment if write-off is beyond 10,000 is reported by other banks subject to normal cooling period. So now this slide is with regard to write-off. If there is a write-off taken place in other bank, whether new loans can be sanctioned by Canara Bank. If the write-off amount is up to 10,000 rupees or credit card receivable write-off is up to 10,000 rupees, and if he's a non-willful default in other banks, so up to 24 months we have to wait, and from the date of write-off, and after 24 months, French loans can be sanctioned both for consumer segment and commercial segment. Beyond 10,000, if you find a write-off, what to be done? Beyond 10,000, if you find a write-off in other bank, for commercial segment, we will not sanction a loan. And if the write-off is above 10,000 rupees in a consumer segment, then in our bank, so the write-off is in other bank, if the amount is above 10,000, it is a consumer segment, then wait for the cooling period, and after the cooling period, fresh loans can be sanctioned in our bank. Then write-off, what is the position with regard to write-off in our bank? No loan to be sanctioned both for commercial and consumer segment if write-off is reported in the irrespective of the amount. See, in our bank itself, there is a write-off. Then why we should give a loan to the borrower? Whether it is a commercial segment loan or consumer segment loan, if it is written off in our bank, before you sanction other loan, we have to ensure that all the contractual dues from the borrower to be recovered. So that means for write-off account in our bank, let us not entertain a fresh loan to the borrower. Then now let us see. Financing non-willful defaulters, commercial segment. So for a commercial segment borrower, that is he has availed a commercial segment loan in other bank. So in that case, your OTS is settled in other bank. Who has to sanction the loan? We are seeing OTS settled with our bank. OTS settled with other banks. Any other financial institution, non-banking financial company, etc. He should be a non-willful defaulter. The minimum cooling period should have been over. What is the minimum cooling period? I already told you. Delegation depends on whether the settled loan is in agriculture or non-agriculture. So what we are seeing, OTS settled either with our bank, with other bank. Normal curing period you have to see. Then you have to see the settled account is whether in agriculture or non-agriculture in other bank. Okay, so if it is a non-agricultural loan, and OTS settled in either in our bank or in other bank, if it is a non-agricultural loan, then who has the power to sanction a fresh loan to the borrower after the cooling period? CGM, GM, HOCAC, and above authorities up to the delegated powers to sanction a fresh loan. That means if it is a consumer segment loan, if OTS is settled in other bank or in our bank, and if the OTS settled is a non-agricultural loan, then in our bank, none other than CGM, GM, HOCAC, and the above authorities are only having power. Before this circular has come, the guideline says circular CAC can sanction up to the delegated power, and before releasing the amount, the permission from HO has to be obtained. Now that has been removed. If the OTS settled account is a non-agricultural account, either in our bank or in other bank, after the cooling period is over, if a fresh loan has to be sanctioned, it has to be sanctioned by CGM, GM, HOCAC only. If the settled loan is agriculture in the other bank, then RO head CAC and above authorities up to the delegated powers can sanction fresh loan. So you have to see whether the settled amount is agriculture or non-agriculture, whether the cooling period is over, depending upon it, the delegation of power is given to sanctioning the new loan in both the cases. So either a settled loan is a non-agriculture in other bank or a settled loan is an agriculture in other bank. In both, who is the sanctioning authority? I told you. In both the cases, fresh loan can be sanctioned for any segment. So a non-agricultural loan is OTS settled, he comes for an agricultural loan. Yes, you can sanction after all these conditions. So an agricultural loan is settled, a non-agricultural loan settled, he comes for agriculture. Or an agricultural loan is settled, he comes for a non-agriculture. In all these cases, whatever may be the settlement, the delegation authority can sanction a fresh loan. It can be either for agriculture or non-agriculture. Now, financing non-willful defaulters, commercial segment, we are continuing after OTS. So suppose the OTS is settled, etc., but the borrower is coming forward to clear the entire dues along with up-to-date interest, whatever contractual interest. So earlier OTS is settled, the party has paid the money, cooling period is over, he is coming for a loan. Who has to give the loan for the commercial segment? We have seen. Now the question is, OTS is settled, but the borrower is willing to pay the entire amount. So he wants to willing to pay. In that case, who has to give fresh loan to the borrower under the commercial segment? Earlier, it was GM, CGM, HOCAC. But if he clears the entire amount along with up-to-date interest, even though OTS settled, he comes forward, then circulated CAC and above authorities can sanction fresh facilities without referring to any cooling period because he has cleared the entire loan. Then, for technically written off accounts, what do you mean by technically written off accounts? In the books of the branch, that account will be appearing as advance, whatever may be the category. But on HO level, since it is a loss account, HO would have kept provision and written off that account. It will not be available for the advances purpose balance sheet of Canara Bank. That is called a technically written off account. For the technically written off account, so if the borrower pays up-to-date interest as per your book, you are having a book, no, that the account is not written off. So in the HO level, the account is written off. So in the technically written off account, if the borrower, because in your books it is as an advance, if the borrower clears the entire loan, up-to-date interest, charges, etc., then ROA, CAC, and above authorities can consider fresh proposal without reference to the cooling period. Okay, there is a segment of consumer segment. We have seen two things. First is wait for the cooling period. And if the return of account in the consumer segment is non-agricultural other bank, CGM, GM, HOCAC, and above authorities. If the return of account is an agricultural, if the return of account is an agricultural loan other bank, ROH and CAC above authorities can permit either in other banks or in our bank. In both the cases, the fresh loan can be for any segment. Suppose if the OTS settled party and the commercial segment clears the entire amount and comes for a fresh loan, GM, COCAC, and above authorities. And if the technically written off account, the borrower pays the entire liability along with up-to-date interest, then ROH and CAC is the respective authorities to sanction fresh loan to the borrower. Then fresh loan to non-willful defaulters. Okay, and again under consumer segment, either settled or written off in other banks. So what I told you with regard to return off consumer segment, up to 10,000 rupees. So you can pay beyond 24 months and the respective sanctioning authority can sanction. Consumer segment return of above 10,000, sorry, commercial segment return of above 10,000, you cannot sanction any loan. Now coming to consumer segment, either OTS or return of what to be done. Circulate CAC and above authorities to sanction subject to the cooling period. Consumer segment, loans given to individuals. Either it is written off or it is what you say OTS settled in other banks. If it is written off up to 10,000 rupees, so who that is in regard to consumer segment, up to 10,000 rupees we can pay, above 10,000 rupees what to be done. Circulate CAC and above authorities to sanction subject to the cooling period. Return of settled is beyond 3 years as per CAC. Respective sanctioning authorities can sanction subject to the cooling period guidelines. Fresh loans along then you have to, so you have to, if it is a consumer segment, circle and CA authorities can sanction subject to the cooling period. If the return of or settled is more than 3 years, then in that case, respective sanctioning authorities can sanction subject to the cooling period. Fresh loans along with the spouse or eldest family member if spouse is not available to be sanctioned. Information about the borrowers to be obtained in other from other banks, financial institutions, etc. as per the format given in 786/23. I told you through this format you have to get the details. Fresh loan to non-willful defaulters, consumer segment settled in our bank. So if it is written off in our bank, we will not give any loan. For the consumer segment, which is settled in our bank, what is the guideline? So the previous slide is fresh loans to non-willful defaulters, consumer segment in settled in other banks. Now, fresh loans to non-willful defaulters, consumer segment settled in our bank. So RO gets CAC and above authorities to sanction subject to the cooling period as far as possible jointly with the spouse or eldest family member. So this is a condition with regard to sanctioning a loan to an OTS settled borrower in Canara Bank under consumer segment after the cooling period is over. RO head CAC can sanction. So we have seen for consumer segment who has the authority. First we have seen for commercial segment who is the sanctioning authority, and then for consumer segment who is the sanctioning authority. OTS settled in other bank, OTS settled in Canara Bank. Write off in other bank, write off in Canara Bank. Okay. Then, so subject to the cooling period exemptions, we told no, that is up to 10%, more than 10%, and that is 24 months, 36 months, and then 60 months. So what are all the exemptions to the cooling period? So if it is that is agriculture and allied activities, so need-based finance for agriculture and allied activities and those belonging to weaker section to get gainful employment up to 50,000 rupees by respective sanctioning authorities. So even though the cooling period concept is there, so you need not see the cooling period. You can give a loan to a borrower, either OTS settle, whatever it is there in other bank or in your bank for agriculture and allied activities by the respective sanctioning authorities up to 50,000 rupees. The condition is 10% of the principal amount repaid before the settlement. You should have repaid it. After 3 months from the date of full payment of the OTS amount only, you can sanction the 50,000 loan. Then, so the condition is so without reference to the cooling period, what loans can be sanctioned? So, loans to for agriculture and loans for weaker section for gainful employment, maximum 50,000 rupees without reference to the cooling period, respective sanctioning authorities can sanction. The condition is 10% of the amount, principal amount he should have paid before the OTS. Then this loan of 50,000 you can sanction after 3 months of the full settlement of the OTS amount. Then agricultural gold loan. I told you agricultural gold loan is also kept out of the purview of the cooling period now. Then what is agricultural gold loan says? Respective sanctioning authorities up to 1 lakh after 3 months of paying the OTS amount and after 6 months, respective sanctioning authorities up to the delegated powers can sanction agricultural gold loan. So agricultural gold loan is kept out of. So if an OTS settled amount is in other bank or an OTS amount settled is in Canara Bank, etc. is there. So respective that is a branch manager after taking the CIBIL report, he finds out there is an OTL. So he has to see only one thing. So he can sanction agricultural gold loan to the borrower after 3 months of paying the OTS amount in either in Canara Bank or in another bank, or after 6 months he has full power to sanction agricultural gold loan. So after the OTS amount is settled. So the importance of this taking the credit information report, for agricultural gold loans also, as per the guideline, we have to take the credit information report. So far, most of us are not taking, but charges are debited to the customer's account. So if you take that is a credit information report, there any return of or what you say OTS is settled appears, and he has not the 3 months is not over after he has settled paid the amount, or 6 months is not over after he has paid the amount. No authority in the bank is having power to sanction even agricultural gold loan. So please make it mandatory to download the credit information report for agricultural gold loans also. Okay. Other gold loans, so up to 24 months for Swarna loan, if there is a write-off or OTS in other bank, whatever may be the write-off or OTS amount in other bank, whatever may be the type of loan, up to 24 months, no Swarna loan to be sanctioned in Canara Bank. So after paying the OTS amount 24 months only, new Swarna loan to be sanctioned by any authority in Canara Bank. These two, that means now the necessity of seeing the credit information report arises before sanctioning agricultural gold loan or before sanctioning a Swarna gold loan. Okay. So this you leave it, not a problem. So this let us not waste time now. So now I want to ask you a question. The OTS, whether it is available only for a non-willful defaulter? No, sir. OTS is available both for willful defaulter as well as non-willful defaulter. In detail, we will see while we are discussing the OTS policy of the bank. Let us keep out of our mind that OTS is available only for a non-willful defaulter. It is available even for a willful defaulter. So far, the delegation of power what we have seen with regard to OTS settled parties in either Canara Bank and other bank, whether fresh loan can be sanctioned, the guidelines what we have seen is with regard to non-willful defaulter. Coming to willful defaulter, what is the guideline? So OTS is settled. So financing willful defaulters accounts or categories as fraud, etc. When OTS and other things are settled, that is, or full amount he has paid in the other bank, etc., etc. Who is the guideline? So there should not be any credit facility in Canara Bank for a willful defaulter for a period of 5 years from the date of removal of their names from the list of willful defaulter. So whenever a party is identified as a willful defaulter, what is a guideline we will see in the OTS settlement policy. Whenever a person is identified as a willful defaulter, his name will be reflected in the credit information report. Once the entire amount is paid, etc., as per the guideline, his name will be removed from the credit information company's report. So, for a period of 5 years, from the date of removal of their names from the list of willful defaulters, no credit facility to be sanctioned by Canara Bank. So, similarly, if it is an account is related to a fraud that has happened place, for a period of 5 years, from the date of full payment of the defrauded amount, so no loan to be sanctioned to this. So, willful defaulter. And then from the fraud case, so in the fraud case, after 5 years from the date of full payment of the defrauded amount, no loan to be sanctioned. In both the cases, after the cooling period of 5 years, provided the full loan amount is repaid without any sacrifice. That means what it is. So when you find out it is a willful defaulter, or when there is a fraud related case as happens, so that is whether a fresh loan can be sanctioned. So after that is a fresh loan can be sanctioned provided he pays the entire paisa amount, entire contractual due without any sacrifice. Then after he has paid the amount for 5 years, no loan will be sanctioned by Canara Bank. After 5 years of completion of the entire liability only, fresh loan can be sanctioned to such borrowers. Anyhow, the legal proceedings, other things will continue. So who is the authority to sanction a loan to a final willful defaulters after he has cleared the entire loan after 5 years is over? Then EDCAC and above authorities. No authority other than EDCAC and above is having the power to sanction a fresh loan to a willful defaulter or defrauded cases after the entire amount is cleared, and after it is cleared, after waiting for 5 years only, it can be sanctioned. The authority is EDCAC and above authorities. So this is the guidelines with regard to sanctioning a fresh loan to an OTS settled borrower. Now you see question number 22. I will read it very slowly. You will understand. Which is not correct with regard to fresh loans to OTS settled borrowers as per HO Circular 257 and 539. First point. If the sacrifice amount as percentage of book liability in our bank or percentage outstanding in other bank is more than 25%, the cooling period for a fresh loan in our bank is 60 months from the date of OTS. Point number B. EDCAC can waive additional cooling period beyond 24 months and no authority is empowered to waive cooling period up to 24 months. C. A write-off amount up to 10,000 other banks may be ignored beyond 24 months by respective sanctioning authorities. Agricultural gold loan up to rupees 1 lakh can be sanctioned after 3 months of paying the OTS amount by respective sanctioning authorities, and after 6 months of paying the OTS amount, respective sanctioning authorities can sanction agricultural gold loan up to the delegated powers. All are correct. Which is not correct, sir? The question is which is not correct. According to me, point number A is not correct. What is that? You read it in between the line. If the sacrifice amount as percentage of book liability in our bank or percentage of outstanding in other bank is more than 25%, the cooling period for fresh loan in our bank is 60 months from the date of OTS. Sir, it is not from the date of OTS. It is from the date of payment of the full OTS amount. First slide, when I showed you this one, I would have showed you. So it is full payment of the OTS amount. The cooling period is not from the OTS date. The cooling period is from the date of full payment of the OTS amount. So do not tick E, which is all are correct. No, here the point number A is not correct. So question number 22, answer is A. If you are thorough with all the slides which I showed you, that is, these are all the times which are given there. So you'll be able to answer all the questions. Don't worry about the answers. These questions are given only to create a confidence level on you. If you are thorough with the subject, you can answer any question. These type of tricky answers also will be there. People used to come from the exam and tell their questions are very easy, but answers are tricky. So you have to read in between the line for all the answers. Okay, sir. Question number 22, answer is A. Question number 23. What is the maximum delegated power for sanctioning gold loan to branches headed by scale 1 per borrower. Okay, quickly we'll go through that slide. Sir. So gold loan, branches headed by scale 1, branches headed by scale 2, branches headed by scale 3, and managers and senior managers in BLB or ELB. What is the power given to them? So, with effect from that is 1/4/2024, as per HO Circular 239/24, MSME gold loan is dispensed with. I think under MSME, you have two types of gold loan, MSME OD or something, whatever it is, that has been removed. So, from 1/4/2024, there is no MSME gold loan. So we have only Swarna, whatever may be the category. Three categories are there in Swarna, and then agricultural gold loan. If your branch is headed by scale 1, if your borrower approaches for Swarna loan, he can give 35 lakhs. If the same borrower approaches for agricultural loan, put together, he can give only 50 lakhs. If he approaches for 35 lakhs, already 35 lakhs is given to him. If he wants to give another 35 lakhs, he does not have the power put together, then the matter has to be taken up with the next higher authority, which is RO. So if the branch is headed by scale 2 and scale 3, whichever scale 2, whichever scale 3, they can give both 35, 35, maximum 70. They need not refer to any other extra authority. So credit managers and senior managers, ELB, they can also sanction 35, 35, totally 70. So in a credit manager, in a BLB or ELB, the gold loan sanction need not be signed by the executive. It is either by the credit manager or senior manager, maximum 70 lakhs. So earlier, before this 239, we have the MSME gold loan also. There also we have another 35 lakhs. Each borrower is eligible for 105 lakhs. But now it is only 70. If it is headed by scale 2 and scale 3, they can sanction 70. Here also he can sanction 70. But the branch is headed by scale 1, he can sanction only maximum 50 lakhs is the gold loan per borrower. Then land records for agricultural gold loan. So earlier, that before the HO Circular 339/24 was issued, land records for whatever may be the agricultural gold loan, either crop loan or land development, etc., whatever you are writing in the gold loan form, land records for agricultural loan, so is to be obtained, the loan amount is beyond 1 lakh. Earlier, it was beyond 3 lakhs. That's why I told. So that is this point, agriculture MSME gold loan has been dispensed with for obtention of land records for agricultural loan. So gold loan, land records for agricultural gold loan beyond 1 lakh to be in place per borrower. So 339/24, earlier it was 3 lakhs. Then for agriculture, I told you 35 lakhs is the maximum loan that can be sanctioned. For crop cultivation, out of the 35 lakhs, maximum only 10 lakhs can be sanctioned. Okay, any question comes here, you should be able to answer. Okay, now see the question. What is the maximum delegated power for sanctioning gold loan to branches headed by scale 1 per borrower? I told you for scale 1 per borrower, both the categories put together, maximum only 50 lakhs. Agriculture 35, MSME 35, and Swarna 35, but maximum per borrower all put together is only 25 lakhs. No, that is not correct. Agriculture 35, MSME is not at all there. Leave it. Then go to C. Agriculture 35, Sarna 35, maximum per borrower is 70. So that is also not correct. What is the maximum delegated power? So none of these. So for question number 23, answer is D. So the maximum delegated power is maximum per borrower is only 50 lakhs. Correct answer is 50 lakhs. So answer is question number 23, answer is D. Question number 24, which is not correct with regard to introduction of risk tier for retail loans as per HO Circular 198/24, and it is reproduced in 516/24. 516, it is a credit risk management policy of the bank. So now let us see the presentation, you will understand. Friends, before this 198/2024 was released, for example, when the CRG is 4, that is Canara retail grade, no, under retail lending, you do CRG1, CRG2, CRG3, CRG4. Before this HO circular, that is 198 was introduced, for risk grade is CRG4, ROA, CAC and above authorities can sanction the loan. Okay, before this 198. Now, subsequently, the guidelines have undergone a change. So, they introduced the concept of risk tier for retail loan. So, the retail loans are classified into, so delegation depends upon CRG for the retail loan. Wherever the CRG is not worked out, it depends upon the credit score. Okay, for example, Canara pension, etc., etc. You are not working out the CRG, but credit score has to be taken. So, if the borrower is a CRG3 borrower, or if the borrower is a CRG4 borrower, so CRG3 borrower is called as near prime risk, and CRG4 borrower is called a subprime risk borrower. Okay, as per HO Circular 198. So for retail loans where CRG is not applicable, where you are not calculating CRG for the retail loan, a borrower whose credit score CS is between 681 and 730, he is called a near prime customer, and the credit score is 300 to 680, he is called a subprime customer. Okay, CRG1, sorry, CRG3, CRG4, and credit score. So if they ask the question, you should not miss it. Then, ceiling on retail loan disbursement for the near prime and subprime customers in a financial year is fixed. How much maximum you bank can sanction to a near prime customer or subprime customer in a financial year is fixed by the bank. So, additional interest for subprime customers 0.25. That means if he is a CRG4 or as per the score he fees this much, besides the normal interest, whatever you are applying, if he is a subprime customer, the additional interest of 0.25% also to be charged to the customer. And who is the sanctioning authority? We are going to see. Change in delegation for subprime. What is subprime? 300 to 680 or CRG4. So if the borrower is categorized and this cadre CRG4 or the score credit score is this much, then he is called a subprime customer. Accounts falling up to the powers of RO head CAC to be sanctioned by the next tier authority only with effect from 1/4/2024. Earlier, it can be sanctioned by RO head CAC. I told you the maximum loan that can be sanctioned to a near prime customer or subprime customer for bank as a whole, not only for your branch or not only for your RO, for the bank as a whole, what is the percentage risk tier? If the borrowers are class for all the borrowers who are classified as a near prime customer in a financial year, how much maximum loan Canara Bank can disburse under retail lending? So ceiling on percentage of retail loan disbursed during the financial year. For example, today we are on October 26th. Till yesterday, let us assume the total retail lending disbursement of Canara Bank is 100 crores. For near prime customer, it should not be more than 10 crore. The disbursement under retail lending. So it should not be more than 10%. If it's a subprime customer, it should not be more than 5% out of the total retail lending disbursement in a financial year. Maximum, it is not for a branch or not for an RO, CO, etc. For the entire bank, it should not be more than 10%. For a subprime customer, it should not be more than 5%. So that is, they say, whenever that is the CRG is exceeding, sorry, the percentage is exceeding 9%, the system has to create a trigger. I do not know whether it is still implemented in the bank or not. When the that is disbursement is going to be above 9% of the, because you do not know in the branch what is the total disbursement for the bank up to the date. So if the disbursement is going to exceed 9%, a trigger has to appear. Similarly, for the subprime, if the disbursement is going to exceed 4.5, a trigger will appear. Trigger where CRG, wherever the CRG is not applicable. When the CRG is applicable, CRG4 or CRG3, when the disbursement exceeding this, you will get a trigger. Wherever the CRG is not applicable, subprime, prime, so near prime is calculated based on the credit score, a trigger will appear after 8% and 4%. If they ask the question, you should not miss. Let's quickly go through the questions. So, which is not correct? Question number 24 we are seeing. Which is not correct with regard to introduction of risk tier for retail loans as well as Circular 198 and 516. Retail under retail loan, CRG3 is classified as near prime and CRG4 is subprime customers. Correct. Where CRG score is not applicable, credit score of 730 to 681 is near prime and 300 to 680 is subprime. Correct. For subprime customers, accounts falling up to the delegated powers of RO and CAC to be sanctioned by the next tier authority. Yes, that is also correct. So NHA means in my question, next tier authority, RSA means respective sanctioning authority. Point number D. So A correct, B correct, C correct. Let us see whether D is correct or wrong. Additional interest of 0.3% to be charged for subprime customers. Yes, that is not correct. So the question is which is not correct. So your answer for question number 24 is D. The correct answer is additional interest for subprime customer 0.25%. No additional interest for near prime customer. Okay, sir. Then what is the okay, let us go to the presentation. Quickly we'll go through. Then now, quickly I'll give an idea about this presentation, sir. Even though it runs 4 slides, quickly. So earlier we have been charging the penal interest straight away for anything on the total liability of the borrower. We are charging either 1% or 2% as the penal interest. Not only that, so if the penal interest is not recovered from the borrower, so interest for that penal interest is also added. Okay, so that is a procedure the bank has been having. So what I have been telling, before the introduction of the circular, we had the concept of penal interest. What is penal interest? Either 1% or 2%, depending upon the loan quantum, etc., priority or non-priority. Bank has been straight away debiting on the penal interest on the total outstanding liability of the borrower. Not only that, for that penal interest, every month or every quarter, bank is charging interest also. All those things have been discontinued as per RBI guidelines. First, the circular has come in 856/23, then it has been carried over. So, as on 1/4/2024, so this is the guideline. From these days, what is the charges to be connected? So that we are not calling it as penal interest, we are calling it as only penal charges. And whatever penal charges are debited to the account, even though the amount is not paid by the customer, you should not charge further interest on the penal charges. That is a guideline. Okay. For delay in payment of the principal, interest charges for priority sector loan. If the loan amount is up to 25,000, there are no penal charges. If the he has not repaid the interest, principal, etc., there is not going to be any penal charges. If the amount is above 25,000, sanctioned amount up to 2 lakhs, 1% per annum, you see, 1% per annum on the amount of default for actual number of days of default and not on the entire liability. Earlier, we have been charging on the entire liability the penal interest. Now that has been removed. So whatever interest 10%, 12% you put, you charge on the entire liability. Now that has been removed. So 1% per annum on the amount of default for the actual number of days of default only, your system has to charge the penal charges. So, and not on the entire liability. If the sanctioned amount is above 2 lakhs, the penal charges is 2% per annum, the same guideline. For agriculture term loan, penal charges will not apply for delay up to 3 months for genuine reasons. Penal charges not applicable for government-sponsored scheme. So, in agriculture, up to 25,000, no penal charges. Up to 2 lakhs, it is only 1%. About disbursed amount, above 2 lakhs, it is 2%. Agriculture term loan penal charges up to 3 months, you need not charge for genuine reason. For government-sponsored scheme, even though the delay takes place, there are no penal charges. Okay, sir, good. Other than agriculture, up to 5,000, no penal charges. Above 25,000, straight away 2%. There, above 25% up to 2 lakhs. Here, above 25,000, straight away 2%, the same condition. For TOD, what is the penal charges? 2% per annum for the period beyond 15 days till the date of regularization, irrespective of the TOD amount. So whatever may be the TOD amount, it has to be regularized within 15 days. If it is not regularized on the TOD amount, irrespective of the amount, you charge 2% penal charges. Okay, so penal charge for educational loan, like that it is there. I need not repeat it. So this is very important. Stock statement. The stock statement, etc., is not submitted here. 2% per annum on the entire liability of the party for the delayed period. 2% per annum on the entire liability. Delay in non-submission of this quarterly operating system and half-yearly operating system. 1% per annum on the fund-based liability for the delayed period. For parties enjoying exclusive in non-fund-based liability, 0.25%. We are so combined. So these things you should remember by heart. Then only you'll be able to answer in the exam. So drawings in excess of the drawing power, 7% of the overdrawn portion or the actual number of days overdrawn. Earlier, we used to charge 2%, 3%, the entire liability. The overdrawn portion, that is 7% on the overdrawn portion up to the overdrawn period. Default liability, diversion of funds, delay in creation of EMT charge, 2% on the entire liability till the, so where it is entire liability and where it is only for the delayed portion, everything is given here. Delayed submission of audited financial statements. Up before October 31st, the party is supposed to submit the audited financial statement if it is not submitted. So 2% per annum on the entire liability for the period of delay. Penal charges for non-submission of renewal papers before 1 month of the expiry date. ODOCC account parties how to renew the that is their ODOCC depending upon the sanction 1 year, 2 year, whatever sanction conditions you are giving depending upon the scheme guidelines. So the renewal papers is not submitted before 1 month of the expiry. So 1 month of expiry, then you have to charge the penal charges like that. So if the loan limit is up to 10 lakhs, there is no penal charges if the penal papers are not given for renewal before 1 month. About 10 lakhs up to 10 crores, 5,000 due, that is up to the due date of renewal, and 10,000 per month till the date of submission. Like that, the guidelines are there. Okay, any question will come there from the penal charges. So non-construction house, as per the permitted timeline, housing loan, 2% from the date of sanction till the date of construction of the on the outstanding liability. NPA accounts slipping to NPA, 2% per annum on the outstanding. Any concession extended to be reviewed by the sanctioning authority. Commitment charges. Similarly, average utilization during the quarter. Depending upon the average utilization of the ODOCC amount you have sanctioned, if it is fully utilized or not fully utilized, if more than 75% utilized, or there also, then there are no commitment charges. And if it is like this, so you have to charge the additional charges. The party is not availing the ODOCC facility less than 75%. Okay, sir. Quickly, we'll go through the question. You'll be able to answer. Question number 25. Which is the odd man out in respect of penal charges for prepayment of credit facilities to other banks and financial institutions? I think that I have not covered. I will cover it there. Now, suppose the borrower wants to take over the liability from your bank to some other bank. Any prepayment charges are there to the borrower on the taken over liability that we are going to see. So far, there was no circular regarding prepayment charges when a working capital limit or non-fund based limit is taken over by some other bank. So we were having the prepayment charges only for floating rate term loans for non-business, for business purpose. So far we are having. Now the guidelines have undergone a change. Both for working capital and term loan, whether it is priority or non-priority, including retail lending schemes. So HO Circular 856 for 23, working capital was not included. But when it comes to 136, 255 and 516, working capital is also included. That is credit policy. So what is the penal charges whenever a borrower takes over, the other bank, it takes over the liability of your borrower, either working capital or non-fund based limit or term loan? What is the penal charges the borrower has to pay? So term loan, so some exemptions we are seeing later. Term loan, it is 2% on the outstanding liability, which is taken over. The taken over liability, 2% he has to pay. Working capital, so far working capital, even in 856, it is not that. Now it has been introduced. Working capital, fund-based limits, 2% on the sanctioned limit. Here it is outstanding liability. So 2% on the sanctioned limit. Non-fund based limit, 0.50% of the sanctioned limit. So for working capital, both fund based and non-fund based penal charges have been introduced. Then applicable both for fixed and floating rates. No prepayment penalty for borrowers under MSC. So whether it is a term loan or working capital, fund-based or non-fund-based, no penal charges, floating rate, whatever rate you are telling. So in term loan, penal charges, I told you for penal charges for term loan, 2% on the outstanding liability. But there is an exception to it. Not to be collected for all floating rate term loans. For all floating rate term loans for purposes other than business to individual borrowers with or without co-obligation. So loan sanction for purposes other than business. For example, you have sanctioned housing loan under floating rate. If the housing loan has to be transferred to other bank, taken over by other bank, it is not for business purpose. It is given to an individual. In that case, there is no prepayment charges. Now let's quickly go through the questions. Which is the odd man out? Question number 25. Which is the odd man out in respect of penal charges for prepayment of credit facilities to other banks and financial institutions? For working capital, fund based 2% on the sanction limit, and for non fund based 0.5% on the sanction limit. So the question is, which is the odd man out? Odd man means which is wrong, which is not correct. So point number A is correct. Point number B. No prepayment penalty for borrowers under MSME, both for term loan as well as working capital. Not to be collected for all floating rate term loans to individual borrowers for purposes other than business. None of this. Which is the wrong point here, sir? Here, which is the odd man out? The odd man out is point B. What is that point B? No prepayment penalty for borrowers not under MSME. I showed you there is no prepayment penalty for borrowers and under micro and small enterprise. If it is an MSME, micro, small, and medium enterprises, prepayment charges is applicable. So for question number 25, which is odd man out, the odd man out is point B. Point number B is wrong. Okay, next we'll go through. Let us leave it. So we'll come back to it. This point. Key financial statement. We'll come back. Okay, now a release of personal properties during the currency of the loan. Sir, I want to ask you a question. If the loan is closed, let us assume the sanctioning authority for the loan is head office or EDCAC or MC of the board, whomsoever it is. Whenever a loan is sanctioned, closed completely, no direct and indirect liability of the borrower, guarantor, whatever it is, who has the power to release the loan document to the borrowers? That is branch in charges. Respective branch in charges have the power to release the loan documents depending upon after the loan is completely closed. If the borrower has died, I told you in the last class, if the borrower has died, single borrower, if a joint borrower, one of the borrowers have died, RO get the permission is required to release the title deeds to the legal heir of the borrower, deceased borrower, along with the joint borrower, or to the legal heir if there is no joint borrower. RO get CAC. Releasing of the property title deeds as per the documentation manual you have to take. Similarly, death claim settlement manual also you have to go through. Now, during the pendency of the loan, the mortgaged property has to be released. Your property is mortgaged for a loan, so the borrower wants to give another property or whatever it is, or the borrower, because his liability was 1 crore at that time, so he has given a property worth of 150 crores, 3 properties. Now the liability has come down to 20 lakhs, still loan is available. He wants to get released 2 properties, 1 property he wants to continue, where the market value, let's assume 1 crore for the single property itself. So during the pendency of the loan, during the time when the loan is still running, irrespective of the liability, irrespective of the liability and irrespective of the sanctioning authority, who has the power to release the properties during the pendency of the loan? That has come in HO Circular 257, delegation of power updated in 539. Release of properties in the names of the directors, partners, proprietors. So far, the borrower, including their close relatives and third-party property mortgage, the brand was not there before the circular 257 but 24 was released. So that was also a delegation of power. Before this circular, only when the release of properties in the names of directors, partners, and proprietors, whenever those properties are mortgaged to the bank, when the loan is alive, then circular to CAC and above authorities have the power to release those properties. But now in this 257, not only the properties belong to these people, even a borrower has availed a loan and mortgaging his property, or a third party property is mortgaged to the bank. In those cases also, during the pendency of the loan, so the circular to CAC and above authorities up to the delegated powers can permit the release of the mortgaged properties during the currency of the loan. So if a property is mortgaged to a loan, either to a, that is, and the property belongs in the case of a company to a director, or in the case of a partnership to a proprietor, or in, sorry, partner, proprietor, etc., etc., including if the property is mortgaged in the name of an individual borrower, the property is mortgaged even including third party property, if the property belongs to the guarantor, again an individual. In all such cases, circle-led CAC and above authorities are only having the power to release the property mortgage to the bank. Maybe housing loan would have been sanctioned, or education loan would have been sanctioned, or Canara mortgage would have been sanctioned, maybe RAH power. But when the loan is still there, the property has to be released due to various reasons, then the sanctioning authority cannot take a decision. It has to be taken by circle-led CAC and above authorities. And for sanctioning a loan, not only properties are mortgaged to the bank, some other things also, maybe, for example, approved securities also can be taken as collateral for the loan. In that case, who is the authority that is for releasing those securities? Please refer chapter 6 of 539/24, what it says. So there in chapter 6, they are distinguished between major variation and minor variation in the sanction. The respective original sanctioning authority can modify the terms and conditions of the original sanction based on the request of the borrowers up to EDCAC power accounts. For example, which is a major variation: amount of facility, conversion of limits, extent of security, interest rate, margin, period of repayment, etc. For example, I told you if it is a mortgage property, then the respective sanctioning authority do not have the power. For example, let's assume he has pledged with you, or a lien you are noted on the deposit of the borrower for an educational loan. So the extent of security now has to be released. In that case, the respective, it is a major credit decision, the respective sanctioning authorities is having the power. It need not go to circle-led CAC. So minor, sublimit, validity of the availment of limits, substitution of the collateral, etc. This is also a minor sanction term. Change in the sanction terms and conditions can be extended by the respective sanctioning authorities. Who are all the authorities to permit the modification? Minor, up to the delegator of the EDCAC, respective sanctioning authorities. CAC of the board. So there's here, let us not forget, let's not worry about this. So up to the delegated sanctioning power of the EDCAC, whether it is minor or major, respective sanctioning authority can take a decision to modify the sanction, except during the pendency of the loan, release of the mortgage property. The circle-led CAC and above authorities only is having the power. So authorities to permit modification major up to the delegated for EDCAC, respective sanctioning authorities. The only thing is major modifications to be got reviewed by the reviewing authority. So when you are sanctioned a loan, you will have sanctioned a loan. Now the modification is going to take place in the, if it is defined as a major modification, before that is modification, informing the modification revised in the sanction to the borrower, or before you are permitting release of the approved security from the loan, then it has to be got reviewed. Only the major modifications to be got reviewed by the next higher authority, whomsoever is a reviewing authority. Let us quickly go through the questions. Who is, question number 26, who is empowered to permit release of third-party properties mortgaged to the bank during the pendency of the loan as per HO circular? That is either third-party property or mortgage property in the name of the borrower, or guarantor, or proprietor, or partner, or director. So who is the authority? Respective sanctioning authority? No. ROHD CAC? No. During the pendency of the loan, mortgage properties cannot be released? No. That is also wrong. Next higher authority? Wrong. E. Circle-led CAC and above authorities. So something I have put again E, that is wrong. So answer for the question is, who is empowered to permit release of whichever the mortgage properties to the bank? Circle-led CAC and above authorities. So question number 26, answer is C, because there is a recent change. That is why I am bringing it over here. So for as per HO circular 409/24, agriculture gold loan, agriculture OD, agriculture gold loan OD for crop purposes and allied activities. Product code 269 and 890. Why I am mentioning the product code here? Sometimes they are asking the product code also. Okay, sometimes they are asking the product code also. That is why whenever there is a change in the circular, if the product codes are mentioned, in the examiner is asking the name of number of the product code also. That is why I mentioned the product code here. So HO circular 409/24, what it says, let us see. Not the agriculture gold loan rate of advance revision 409/24. Agriculture GLOD for crop purposes and allied activities. Product codes 269 and 890. Loan amount not to exceed 85% of the appraised value or the scale of finance. In respect of crop cultivation, either appraised value or scale of finance, whichever is less. And for allied activities, assessed working capital or for scale of finance, whichever is less. It should not exceed 85% of the appraised value. Earlier, it was 90%. Earlier, it was 90%. Now it has reduced to 85% for this type of agricultural gold loan for crop and allied activity purpose only. This I have given here, which is the existing appraised, that is not how much appraised value should be, what is the percentage of appraised value for all other gold loans as per HO Circular 187/21 does not undergo a change, which I have given here. Product codes are also given here. Please go through this slide. So the change in the question paper is the change presently as per HO Circular 409/24, agricultural gold loan amount not to exceed 85% of the appraised value, etc., etc. So question number 27 answer is B. So if they ask other questions, other product codes, the slide you have to go through, sir. Then question number 28. And that employees housing loan, I need not tell. By this time, you are thorough with that. Housing loan quantum increase with effect of 1/6/2024. HO Circular 394/24. Substaff. So within brackets, here I have given the revised amount of housing loan. Within bracket, I have given what was the existing level. For example, for scale 4, people who are going for scale 3 to scale 4 promotion, from 100 lakhs, it is increased to 150 lakhs. Scale 5, 100 to 150. So like that, it is their quantum. Figure in bracket, that is indicates the existing level before the increase in the housing loan quantum. Then that is revision within the overall limit for repairs and renovation. So what is the maximum amount under repairs and renovation? Various scales are given here within the bracket, the existing, because you should not miss out anything. So the examiner will go through the circular, the latest circulars, and from there, so comparison will be given if they ask for scale 5. So what is the maximum amount for loan for repairs and renovation, or it has been increased from 20 lakhs to 30 lakhs. What is the maximum? In all the cadres, it should be 20% of the limit. So you are, suppose if you are scale 150% to 150 lakhs, you are eligible for housing loan. The maximum for repairs and renovation should not be more than 20%. So any question will come, sir. Okay, then for rate of interest for housing loan amount, so 394 and 426, the two circulars. Loan amount up to 40 lakhs, 5.50% per annum, simple. Loan amount above 40 lakhs, 6% per annum, simple. So the borrower, so you see the loan amount total is having 80 lakhs or 60 lakhs something, up to 40 lakhs, 5.5, above 40 lakhs, 6% per annum, simple. So aggregate principal loan amount outstanding, including employees housing loan, if any, up to 40 lakhs and above 40 lakhs. Clarity has come in 426/24. Okay, DPN can be closed and availed. The stipulation of 1 year gap between the availment of fresh loan after closing the previous DPN stands withdrawn. So gold loan to employees up to 5,000 for purposes other than agricultural stands discontinued. But recently one circular has come with regard to gold loan to employees of the bank. Okay, recent circular, please go through it. So that also in some other class, somebody will be talking to you. Okay, sir, let's quickly go through it. Which one does not find a place in HO circular? Question number 28. Which one does not find a place in HO circular 394/24 for employees housing loan? Substamp 50 lakhs, correct. Scale 4, 150 lakhs, correct. Scale 8, 180 lakhs, as against 130 lakhs earlier. That is also correct. None of these. So for question number 28, answer is D, which is not find a place. All ABC finds a place in the circular. So none of these. Question number 28, answer is D. So which one is not an old man out as per HO Circular 516/24? So So 516/24 is the credit policy of the bank. Which one is not an odd man out? I told you which is an odd man out means which is wrong, which is not correct. Which is not an odd man out means which is correct. Okay, please keep in mind. Which is an odd man out, which is not correct, which is wrong. Which is not an odd man out, which is correct. Okay, that is about this one. Quickly go through the important point over there. Okay. So in the case of I am discussing with you only the changes that has taken place in the last 2 years. In detail, the credit policy or in detail the credit risk management policy, including the existing guidelines, various authorities will be discussing, various faculties will be talking to you. Now, suppose the changes in the takeover. First, it has come in 378, then it has been included in the 516 recent circular also. If the proposed borrower clears the liability in other banks from his own source and approaches our bank for credit facilities after 3 months, such proposals to be kept out of the purview of the takeover norm. So he is having a loan in some other bank, whatever may be the type of loan. He closes the loan out of his own finance. He comes to you for a loan. So if he comes to you for a loan after closing after 3 months, then you need not consider this a takeover. Takeover norm is not applicable. So you have to sanction by doing the normal pre-sanction exercise. Bank shall obtain the details of dealings with the bank financial institution in such cases also and satisfy itself about the operation. So even though it is not considered as a takeover, you get the financial dealing from the other bank and do the process. Here also you have to take not only for takeover, even after 3 months if it comes, it is not considered as takeover, but you have to get the details from the other bank. Then for retail loans and agriculture loan, other than and food and agro processing, the cooling period is 10 days. Okay. If he comes for a loan for either retail loan or agricultural loan, after he has closed some other loan in other bank, he is coming to you either for retail loan, agricultural loan. You need not wait, not to consider it as takeover. You need not wait for 3 months. 10 months could then 10 days cooling period is change is sufficient. That is first told in 378/23. Sanction communication of the previous banks, including modification money for the last 3 years, shall be obtained and analyzed and verified. So the days 10 days, no, 10 days. You are not considering after 10 days, you are not considering as a fresh as takeover loan for agriculture and retail. In such a case, you have to get the sanction communication of the previous banks, including modification, if any, for the last 3 years shall be obtained, analyzed, and verified, even though it is not considered as a takeover. However, with regard to takeover of agricultural loan, the above condition is relaxed to last 1 year. So it is relaxed to last 1 year, even though it is not considered as takeover. It is sufficient if you analyze it for last 1 year. Here it is last 3 years. That is one change, sir. Then some changes have come in the same circulars, one other circular also. Takeover of credit proposals by the bank from any bank where any of our old-time directors have worked earlier. Before this, it was what it was. It was like earlier where our executive director and managing director and CEO worked earlier. Now they have included all the whole-time directors. So whole-time directors, executive director, MD and CEO, besides that, whomsoever the whole-time directors, if they worked in some other bank and the Canara Bank wants to take over a loan proposal, not that these people's loan proposal, any other loan proposal, take over a credit proposal by the bank from any bank where any of our old directors have worked earlier, who has the power. So CGM, GM, HOCAC to permit such a takeover up to the delegated power. Earlier, only MC of the board, management committee of the board, was having power to take over the loans from other bank where these people work, not these people's loan. The loans from other banks where these people worked earlier MC of the board only was having the power. Now who has the power? CGM, GM, HOCAC and above authorities are having the power. Monthly information report to be placed to MC of the board. So whenever the CGM, CAG is permitted takeover in such cases, an information report to be placed to MC of the board. Earlier, it was placed to CSC of the board. In 378/23, they told monthly information report to be placed to CAC of the board. Now in 786/23, they say monthly information report to be placed by MC to the MC of the board, wherever permission was given by CAG, CGM and GM HOCAC. Beyond CGM, HOCAC powers, who has to permit takeover of the loans from other banks where any of our old-time directors worked? Beyond CGM, GM, HOCAC powers, who has to permit such a takeovers? Beyond CGM, HOCAC powers, sanction to be permitted by the MC of the board and such sanctions to be placed to the board of directors for prior clearance. So if it is not sanctioned by CGM, GM, HOCAC, it has to be sanctioned by the MC of the board. So after it is sanctioned, it has to be placed before the board of directors before clearance. So in the board of director or in the board or in the EC, that is MC, the executive director also would be finding a place. Suppose if the loan is going to be taken over by some other bank where that executive director has worked earlier, then what the guideline says. The concerned executive director should rescue himself from the decision-taking process. This is the new point in HO Circular 786/23. Okay, sir, this is then we'll see. So three slides are there for change in the takeover. Please be thorough with the slides. In respect of takeover of accounts from consortium. So what do you mean by takeover of accounts from consortium? Our fresh entry by our bank in consortium is called takeover of loan from consortium. Okay, so in respect of takeover of accounts from consortium, that is fresh entry by our bank in consortium, or takeover of loan that is from another sole bank, or takeover of loan from any other multiple bank, account should not have been appeared in SMA2 in the other bank in the last 18 months. Earlier, it was last 1 year. So before the circular was issued, 115 or 24 was issued. You should not have appeared in SMA2 in the earlier last 1 year. Now it is in the last 18 months in other banks. You should not have appeared in SMA2. As per CRELIC report, Central Repository of Information on Large Credits. CRELIC expansion is Central Repository of Information on Large Credits. People who are talking the credit monitoring and review policy or coverage policy, they'll be talking about CRELIC also to you. If CRELIC is not applicable, to be verified through commercial CIR or CMR, CIBIL MSME rank. Okay, so taker of loan, if other banks or financial institution, you should not have appeared in SMA2 in last 18 months. Any of the months you should not have appeared. ABS audited balance sheet for the last 3 years to be obtained. Before the 115 was issued, it was only last 2 years. For corporates, ABS filed with the Register of Companies to be verified for the last three corporates. So besides obtaining the ABS from them, you have to verify the Register of Companies site and you have to ensure that for the last 3 years, the audited balance sheet filed by them as verified. Earlier it was 2 years only. So what is the change? SMA to earlier 1 year, now it is 8 months. Audited balance sheet earlier 2 years, now 3 years. Similarly, here audited verification ROC earlier 2 months, now 3 months. ABS obtained should not be more than 3 months old. So the ABS, what you are going to obtain, analyze everywhere, it should not be more than 9 months. Earlier also the same guideline. Here one change has come, you see. The minimum 1 year of existence with other bank for exposure up to 100 crores and 2 years for other exposures. Period to take over, period to take over is necessary. That is existence with the other bank. Period to take over is necessary in respect of good borrowers who left our bank for better pricing, though they had good relationship with our bank. Earlier, this condition was waived. See what I am telling? Before takeover from other bank, if the exposure is up to 100 crores, it should remain in other bank for a minimum period of 1 year. If the exposure is above 200 crores, it should have existed in the other bank for a minimum period of 2 years. Earlier, this is applicable. It is this condition is not applicable to a borrower who has left from us and went to another bank because of, even though they had good relationship with us, it was taken over by other bank because for better pricing. So this condition of 100 crores 1 year, 200 above 100 crores 2 years was not there. Now, again, that condition has been reintroduced. That means a good borrower, because of better pricing, the loan was taken over by other bank up to 100 crores. It should remain there for 1 year. If the exposure is above 200 crores, it is taken out from our bank, even though the borrower is going there for better pricing, it should have remained there for 2 years. Then only again you can take it back for like any other borrower takeover. So this condition again it has been reintroduced in HO Circular 115 bar 2024. Okay, sir. Quickly we'll go through the question. Which is not an which one is not an odd man for takeover as per HO Circular 516 bar 24. Which is not an odd man means which is correct. Okay, question number 29. Which is not an odd man means which is correct. If the borrower is closed his loan, forget about retail. I mentioned retail loan. So borrower has closed his loan in other bank out of his own source and approaches our bank for fresh finance after 10 days, it need not be considered as takeover for a retail loan. Correct. Takeover of credit proposals by our bank from any bank where any of our old-time directors have worked earlier, CGM HOCSC can permit up to the delegated powers. That is also correct. The minimum of 1 year of existence with other bank for exposure up to 100 crores and 2 years for more than 100 crores prior to takeover is necessary in respect of good borrowers who left our bank for better pricing, though they had good relationship with our bank. That is also correct. Reintroduced point. The account should have not been appeared in SMA2 in other bank for the last 18 months. That is also correct. Options A to D all are correct. So all options are correct, sir. Question number 29, which is not an odd man out. All are not odd man out. All are correct. Question number 29, answer is E. All options are correct. Okay. Which is correct guideline in respect of obtention of documents for ad hoc credit facilities. So if ad hoc credit facility is permitted for a period of more than 30 days as secured or more than 15 days as clean, document as applicable shall necessarily be obtained. If ad hoc credit facility permitted for a period not more than 30 days as secured and not more than 15 days as clean, loan papers are applicable shall be obtained if such overdoings are not regularized within the specified time 30 days or 15 days. Point number C. Irrespective of the period of the facility, documentation to be obtained before the release of the ad hoc credit facility. None of these. So the answer for the question, if you go through the presentation, so these things you go through, sir. So I'm not spending time over this here. Modified benchmark parameters, please go through. Here I want to drive that. Okay. Then modified delegation. So with regard to stressed asset sector, okay. So in HO Circular 587 bar 24, the guideline has come. Modification ad hoc credit facility. Irrespective of the period of the facility, documentation to be obtained before release of the ad hoc credit facility. Earlier, you have this condition. So up to 30 days, up to 15 days, you need not take documentation. So beyond 30 days, beyond 15 days, if you sanction only, you have to take the documentation. You are sanctioned within 30 days, within 15 days. If the borrower is not repaying, then you have to take document. Now, irrespective of the period, whether it is a clean loan or secured loan, etc., whenever ad hoc has to be given, irrespective of the period, etc., whatever documentation to be taken, it has to be taken. So, which is correct with regard to guidelines in respect of obtention of the documents for ad hoc credit facility, that shows up 584 by 24. Irrespective of the period of the facility, documentation to be obtained before release of the ad hoc credit facility. Okay, sir. Here, what I have missed out, just I will tell you, you should not miss it out. You also should not miss it out. Then, yes, so this circular I have so due diligence for MSME loan, HO circular 641 and HO circular 666 for 24. So when you have to take due diligence from the due diligence agency, MSME units approaching our bank for the first time for credit facility above 10 lakhs, eligible to be covered under CGTMSE, due diligence from empaneled agencies to be obtained. This was told in HO circular 577 bar 21 and 610 bar 22. So when you have to do due diligence, MSME units, first time approaching loan, if they ask for an amount of above 10 lakhs, and then to be which the loans to be covered under CGTMSE, you have to take due diligence. This is told in these two circulars. Then the guidelines in 641. Now, who are all the due diligence agency? So Mrs. Acumen Business Consultancy Private Limited is a due diligence agency. Both bank has renewed from 24 to 27. Mrs. Informatics Analysis Research Agency is also a due diligence agency. Mrs. CRI Solution, this is a period of validity of the that is renewal with these agencies. Then this is done. Then charges. What is the charges? We have to pay whenever the due diligence report is taken by them. So the charges are given, and then so these charges, earlier charges, new charges, and all also are given. So the due diligence agency, within how much time they have to do the due diligence reports, give you the report within 3 working days from the date of receipt of all information from the branch. The due diligence agency have to give the report. If they are not giving the report within 3 days, so the fees I told you, no, you can reduce the fees and you can make the payment to the due diligence agency. So that is 3 days. If it is not done, if they give you after 3 working days up to 7 days, only 50% of the charges only you have to pay. Above 7 days, if you get, no charges need be paid to the due diligence agency. That is told in these two circulars. So that is in the previous circular 641. The due diligence agency Samera was not there. Now the Samera rating agency's MOU renewed from 3/8/24 to 2/8/2027. Charges irrespective of the loan amount is 12,000. There is no change. All other circulars of EXO circular 641 to be obtained. So 641 and 666 charge says about a renewal for MSME loans due diligence above 10 lakhs first time from the bank. They are to be covered under CGTMSE, which are all the due diligence agency. For example, I told you, the risk rating agency, which is an odd man out. They will give 4 risk rating agency and suddenly they will give the Samara there. Use a due diligence agency. So you should be able to take Samara from that. So this is the way the questions will be created by the examiner. Okay, sir. This is due diligence agency. What is the charges? What is the renewal period? Under which period it is eligible? And then what are the charges? Existing charges, new charges. What is the turnaround time within which they have to give you the report? And if they are not giving the report, what is the charges you have to pay to the due diligence agency? Okay, sir. Then, so this I am not going in detail. So after the delegation, after your credit policy has come, in HO Circular 586/24, they brought out in 516. So 516 was the original latest credit policy. In 586, the changes have been brought about in some certain benchmark parameters for MSME loans coming under 9 industries. So for corporate and MSME, so the changes have come under certain benchmark parameters. I am leaving it to you to read. Okay, sir. I'm sorry. I'm leaving it to you to read it because this only just the numbers, which are all the industry. What is the debt to equity ratio, and then FCAR, everything I have given here. Please go to DSCR. So please go through it. You should be able to answer the question. Maybe for 4 to 5 or 3 to 4 questions will be there from this. But why I am leaving it, because 586/24, maybe that latest circular they may not cover. That is why I'm running it so fast. But please go through that circular also. So modification and delegation. So modification delegation HO circular 539. So 539 was the latest delegation up to 36/2024. In 587, there is a modification has come for that. What is the latest modification? Guidelines for sanctioning fresh credit facilities to new customers, including takeover under sectors identified as stressed sectors by bank. So, whenever you are going to give a fresh loan to a borrower who is coming under the stressed sector, identify the risk management being of the bank, or you are going to take over the loan from other bank to a borrower who is considered the stressed sector by bank, what is the guidelines of that? That is given in 587. Since it is a recent circular, I am also just missing it. So please go through it. So the modification of the ad hoc credit facility, I already told you, please be thorough with that. So 587 and then the other two, I have made that. Please go through these slides. That is more than sufficient for you. Then interest rate for education loan and Canara Ready Cash 625. Education loan for studies abroad above 7.50 lakhs. Existing is RLLR plus 1.60. Now it is reduced to RLLR plus 1.25. Canara Ready Cash pre-approved personal loan. The product code is 3018. So wherever in the circular it is given the product code, I have mentioned here possibility of getting a question. Existing RLLR plus 2.70, revised RLLR plus 1.70, applicable for all new loan sanction on or after 614. In HO Circular 615 and 620 per 24, waiver of 50% processing charges for all education loans sanctioned between 19 to 31/12/24 is permitted. Now in the 625, they told the days disbursed during this period and sanctioned during this period and disbursed before 15/1/25, 50% processing charge is waived, that is told in 615. In 620 by 24, they told who has the authority to permit waiver of the sanctioning 50% processing charge respective sanctioning authorities. That was told in 620 by 24. Okay, sir, let's not waste time there. Now, in Circular HO Circular 604, 606 by 2024, Bank has introduced uniform format for unit visit, post-sanction visit. New format for documenting unit post-sanction visit for all loans, either retail, agriculture, MSME, or corporate loan, has been introduced in 606 by 2024. This is in addition to the existing format for stock inspection NF 814 and inspection of immovable properties as per Annexion 5 of HO Circular 157 by 2020. So HO Circular 157 by 2020 talks about LSR, legal scrutiny report. There they are given visit of immovable property report. So as per Annexion 5. So that also you have to take for stock inspection NF 814 also you have to take. Besides this, the format given in this circular also to be taken for unit the post-sanction visit. So photographs of visits to be annexed along with the report. Okay, this is the new guideline. So why again NF 814? Because last time they asked in one of the circulars it is mentioned about what is the mortgage register, loan document movement register, what is the form register, what is the register number they ask. That is why I given the stock inspection format is 814. Besides that, you have to take this one also as given in this HO circular. Then this is very important, sir. Very important circular. Question we'll see. Timeline for verification of loan papers. HO Circular 266 has come. Subsequently, a slight modification come in 600 by 2024. So you are having the original loan document. So borrower loan papers are there. Whenever a mortgage or property is taken place, you are having the document of the borrower. Okay, I also told you, so when the loan is closed, so all the documents given in the LSR, original documents, and the charges to be cleared within 30 days of the close of the loan. Otherwise, 5,000 rupees per day we have to give to the individual borrower. If this, in the case of an entity, the penalty need not be paid, but there also you have to clear it within 30 days. If not, if the documents are lost, within 60 days you have to do, somewhere we have seen. Now, so the documents are available either for the closed loan or for the existing loan. So a confirmation to be sent by the branches to the regional office. Now, as per HO Circular 266, from the regional office, they will depute somebody to you to verify what you are given in the statement is correct or not. They also have to give a consolidated report to the regional office to ensure that all the original documents are available with you, either for the loans which are not closed, even for the loans which are closed, it should be available with you if the documents were not released to the borrower. Half-yearly balancing of loan papers and mortgage papers, including closed loan, which are yet to be delivered to customers, to be done by the branches on 20th February and 20th August, and also during the commencement of regular risk-based internal audit, that is a regular inspection. Branches to submit the reports by 28th February and 31st August. Earlier, the timelines were different in 266. In 600, the timelines have undergone a change. So take the balancing and give the confirmation whether documents are available or not before 28th February and 31st August to the controlling office. RO regional office to depute officials not below scale 2. In 266, it was not below scale 3. In 600 by 24, they reduced it to scale 2. RO to depute officials not below scale 2 to cross-verify by 25th of February and 25th August and submit the report. These people also have to submit the report. RO deputed officials to submit the report by 10th March and 10th September. These are all the timelines questions may come. Then RO to verify both the reports submitted by the branch and reports submitted by the deputed officials. RO to verify both the reports and submit confirmation to circle office by 20th March and 20th September. CO to submit the report by 31st March and 30th September to credit administration and monitoring HO. Reports as per formats in HO circular 600/2024 to operation sections in regional office or in circle office. So this is the revised guideline with regard to the time norm and which official will be deputed from the regional office. It was earlier scale 2, now it has made as scale 3. Sorry, earlier scale 3, now scale 2. And what is the periodicity of taking the that is balancing, and when it has to be submitted to the concerned authorities, RO will depute. They also have to submit the report. So GL balancing. So GL balancing is out of the purview of the circular. And if the risk-based internal audit, that is, if the regular inspection commenced or conducted during January to March and July to September, then RO officials need not visit and verify the branch. Verify because during the RBA also that will be done. So if the risk-based internal audit, that is a regular inspection, is commenced or conducted during January to March or July to September, then RO need not depute the officials to verify the documents. Okay, so let's quickly go through the question. Anything? Obtention of documents is over. So what is the cutoff date for submission? Question number 31. What is the cutoff date for submission of availability of loan documents, including closed loans, which are yet to be delivered to customer by branches to controlling office, which are yet to be delivered to customers by controlling office, by branches to controlling office, as per HO circular 600/24. So question number 31 we are reading. Okay, sir, as per HO circular. So that is, it was 20th February and 20th August is the balancing date. March 20th and March September, no. 28th February and 31st August. Okay, if I am correct, it is 28th February and it is 28th February. Branches to submit the report by 20th February and 31st August. That is a change, sir. That was the change over here as compared to the earlier circular. So 28th February and 31st August. So question number 31, answer is C. Okay, then as per HO circular 13/24, so these questions subsequently mostly I have not prepared the presentation. Wherever presentation you will say, or straight away you will see the answer, sir. As per HO circular 13/24, Canara Bank proposal processing, that is Canara Bank proposal rating CBPR, is applicable for new as well as renewal with enhancement, proposal of rupees dash crores and above under MSME, agriculture, infrastructure and food processing and corporate accounts, rupees 10 crores and above. So answer for question number 32 is rupees 10 crores and above. Okay, question number 33. For all new loan sanctioned wherever applicable after 16/1/2024, the liquidity premium for loans repayable after 1 year. So wherever for MSME loans, liquidity premium is applicable. For all new loans or wherever liquidity premium is applicable, the liquidity premium over and above your interest rate. So the liquidity premium on or after loan sanctioned from 16/1/2024 underwent a change in the bank. For loans repayable after 1 year, revised as per HO circular 30/24. Which one does not find a place in this circular? So questions may be expected because it was circular was issued in the beginning of the year. By this time, you should be thorough. Revision in the liquidity premium, existing guideline. What is the existing guideline? What is the revised guideline? Loans repayable more than 1 year, up to 5 years, 0.40%. So liquidity premium, additional interest you have to add. Loans repayable for more than 3 years, 0.80. You had only two slabs. Very simple. Above 1 year, up to 5 years, and above 5 years. So what is the liquidity premium? Wherever it is applicable, you have to add. Okay, now the revised guideline. They are given loans repayable above 1 year up to 2, like that they are given the category. And what is the additional liquidity premium? Now the maximum liquidity premium is only 0.45. Earlier it was 0.80. This is for all new rupee loans wherever applicable, sanctioned with effect from 16/1/2024. You have to obtain. Now let us quickly see the answer. for all new loans. So, which one does not find a place in the circular? Repayment period more than one up to 2 years, 0.10, correct. More than 5 years, up to 7 years, 0.70, correct. More than 10 years, 0.80. It is not correct, isn't it? So, more than 10 years, it is only 0.45%. So, which is not correct. I think it is asked in the question. So, your answer should be, for question number 33, answer should be C. Okay, sir. Then, as per HO Circular 39/24, who is the authority to permit valuation of assets of certain complex projects by valuers having domain expertise up to the circle-led CAC power? So, this also earlier circular. So, I'm giving this, spending little time. I told you the valuation, the revised guideline was given in HO Circular 801/23. From there, few questions we discussed earlier also. Now, in HO Circular 39/24, for complex projects, so empanelment of valuers who are having domain technical expert, so the bank has empaneled them as per HO Circular. Certain points are there, we have to quickly go through. To value assets that are taken as security in complex projects related to industries such as steel industry, cement, coal, ports, power, road, etc. Individual or firms should have minimum industry domain experience of 5 years with a technical background or have undertaken assignment in minimum of 10 high-value projects with project cost of 250 crores and above. Okay, these numbers you should know, sir. I cannot help it. Age of individuals should not be more than 65 years at the time of application. Okay, individuals who are applied for that. So either individuals can do the job or firms can do the job. If it is firm, the expertise should be like this. If it is individuals, expertise should be like that. They also have the age limit. Like we are having the age limit of 60 years for retirement. Projects falling up to and including power circulate accounts, entrustment to domain experts to be permitted by Project Appraisal Group HO. Who has to permit it? Project Appraisal Group HO. Okay. The duration of the empanelment is essentially 2 years, can be extended by another 3 years, thereafter to be renewed every 3 years. Fee structure to be borne by the borrower. So value of the security, if it is less than or equal to 5 crores, maximum fees as percentage of the value of the security, it is given here. These numbers you should know. Depending upon the value of the security, so maximum fees as percentage of the security subject to a maximum level has been fixed by the bank in HO Circular 39/24. Okay, sir. Quickly we'll go through this point. You'll be understanding. Only give so as per HO Circular that is 34, who is the authority to permit valuation of assets of certain complex projects by valuers having domain expertise up to circulated CAC powers? Project Appraisal Group, PAGHO. Project Appraisal Group, PAGHO is the authority. Then question number 35. As per 39/24, the individual's firm should have a minimum industry domain experience of 5 years with a technical background or should have handled a minimum 10 high-value projects with project cost of rupees 250 crores and above. With project cost of rupees 250 crores and above. In the case of individuals who are going to be empaneled as valuers, domain expert age should not be more than 65 years. Question number 36, answer is 65 years. The duration of the empanelment, question number at 37, we are seeing the duration of the empanelment is 2 years and we are extended by another 3 years. Thereafter, it will be renewed every 3 years. Okay. So, up to question number 37, we will see it shows 39/24. Since it is beginning of the year issue, questions made possible. It is not the latest circular, sir. Generally, after the exam date is announced, any circular comes, the expert, as per Mr. Ravi Kumar also analyzed the questions and used to tell once the exam date is announced, they are not asking questions from the circulars issued after the exam date announced date. Okay, sir. Then, then question 38. What is the incentive to bank Sakis for opening SLG SB account? Answer is rupees 300 per account. For credit linkage, it is 500 per account. So already it is there. So for opening the account, 300 rupees per account. For the account is credit linkage is taken place, rupees 500 per account. Okay, question number 39. For free credit score is available to mobile banking customers once in 90 days from which CIC as per HO Circular 145/24. Answer is Experian. So question number 39. Answer is Experian. Okay. Then as per HO question number 40. As per HO Circular 192/24, branch head, officer of the base branch, should visit the business correspondent agent outlet once in. What is the periodicity of visit? That is HO Circular 192/24. Branch head officer of the base branch should visit the business correspondent outlet unit once in a week. So they have to visit once in a week as per HO Circular 192/24, once in a week, sir. Then BCA's business correspondent agent services should not be utilized inside the branch premises and within how many meters of the branch premises? Within 100 meters. Within question number 41, answer is 100 meters. Then RO officials to visit 50% of the business correspondent outlets once in a quarter and 100% once in a year. Once in a quarter and once in a year. Business correspondent agent meet to be held at RO every month, 10th of the month. To be held in RO every month on 10th of the month. Okay, 44. As per HO Circular 210/2024, what is the threshold limit of exposure for classifying an account as a red flagged account based on early warning signals? Rupees 3 crores and above. This question was asked last time for 2 to 3. The last exam it was asked 2 to 3. Earlier it was 5 crores and above. Sorry, 50 for red flagged account was 50 crores and above. Now in HO Circular 210/24, last year also a circular has come that they changed the guidelines to 3 crores and above. What is the periodicity of risk management group meeting? RMG means risk management group meeting at circle office. So group meeting at the circle office monthly 10th of the month. So monthly 10th of the month. Okay. Which committee will decide to classify an account as a red flagged account? Which committee will decide that is to classify an account as a red flagged account? Fraud management. Okay. Fraud management committee at HO, FMG. So what is a red flagged account? So 3 crores on the exposure if it is there. And if you find out certain things happening in the account, certain things which give some suspicion that there is some fraud is taking place, the account is going to slip to NPA. So which are all the signals? Those signals are called early warning signals. If you find out, you have to immediately escalate to the concerned authority. Then they will decide whether the account has to be reported as a red flagged account to CRELIC or to CBIL, whatever you say. So red flagged account, whether it has to be reported to them. So that is called a red flagged account, early warning signal. So what is the timeline to classify an account? So once you have decided to that is red flag an account, it has to be the exposure is 5. Normally red flagged account 3 crores and above. If the exposure is 5 crores and above, you have to escalate it to the CRELIC, Central Repository of Information or Logic Date. The next question is which committee will decide? Fraud Management Committee at head office. Then what is the maximum timeline to classify an account as fraud or remove from the red flag? So you have decided first you are red flagged the account, precaution to all. It is we are red flagging it. Then time is given to the bank 6 months. Either you have to remove it from the red flag or classify it as fraud. What is the timeline within which the bank has to do from the date of reporting it as a red flagged account? Within 6 months that has to be done. What is the timeline to classify an account as a fraud or remove the red flag? Within 6 months from the date of reporting it as a red flagged account to various authorities. How many early warning signals are given by RBI and Department of that is financial services. So yeah, I told what is early warning signal. Some signals are taking, some things are taking place. You get a suspicion that is called the early warning signals. So how many early warning signals are given by RBI? There are 43 early warning signals are given by RBI, whereas 84 are given by Department of Financial Services. You should know the number. So early warning signals, how many number? 43 by Reserve Bank of India and 84 by Department of Financial Services. These are all given in the circulars. So 43 point you should know. Similarly, 84 points you should know. If any one of these things or combination of these takes place, and if you feel it has to be a red flag, you have to report it to the fraud management group, then they will take a call. So 43 and 84. What is the product codes of GL loan discontinued as per HO Circular 239 by 2024 with effect from 1/4/2024? I told you as per HO Circular what is the product code? I told you MSME gold loans have been discontinued with effect from 1/4/2024 as per HO Circular 239 by 24. What is the product code? So MSME gold demand loan, MSME gold demand loan, product code 709, and Canara MSME gold overdraft, product code 215. That is 709 and 215. Why I am giving this? Once they ask. So some of the loans have been closed as per HO circular. So as per this circular, the product code for this loan. So even you may think it is funny. So even though the loan is closed, in one examination they ask what is the product code of that loan which is terminated by the as per HO circular. That is why I am giving this. Okay. Okay, what is the product codes of gold loan discontinued as per HO circular? Two product codes, 709 and 215. Okay, sir. As per HO Circular 218 by 24, a new sanction memorandum format has been introduced for what loans? So, loans against our deposit. So, new sanction memorandum format which is to be given to the borrower. It is loan against our deposit, either OD or BSL, which are sanctioning a new loan against our deposit. A new format has come that has to be given to the borrower. Copy has to be kept with your loan papers in HO Circular 218 by 24. Okay, sir. Then, how many area specific schemes are there under MSME for the year 24-25 against 16 in the previous year as per HO Circular 252 by 24? There are, for bankers involved, there are 11 area specific MSME loans. 11. Last year it was 16. This year it was 11. 11, sir. As per HO Circular 276 by 24, the for oral telephonic permission for ad hoc extension of it, etc., has to be routed through the XAS portal. Hence, submission of which format is dispensed with. Friends, so earlier, when you are getting an oral, if you want an oral permission, if you are getting from the various authorities, then you have to get a report to them in one format for having obtained the oral permission. Then the loan has to be sanctioned. Then it has to be sent for ratification, whatever it is. So now that has been dispensed with. The oral sanction, what you are getting, it has to be punched in the SAS package only, and it has to be sent to the appropriate authority. So, which format has been dispensed with because of that? NF 254. So far, for oral permission or telephonic permission, we used to submit NF 254. Now that has been dispensed with. Okay, then Okay, then question number 53. As per HO circular 283 by 24, who is the chairman of district level consultative committee? Let's quickly go through the lead bank responsibility. Okay, lead bank responsibility, HO circular 283 by 24. For which states Canara Bank is a lead bank? For which union territory Canara Bank is a lead bank? What is the LDM? All those things are there. Any question may come. Canara Bank is assigned with state level bankers committee responsibility with Kerala and Karnataka. Union territory level bankers committee responsibility is assigned to Canara Bank with Lakshadweep UT. Lead bank responsibility in 61 districts spread over 8 states and union territories. So for these two states, we are the lead bankers, and for this UT, we are the lead bankers. Besides that, for 61 districts spread over 8 states and union territories, we are the lead bankers. As on date, 12 public sector banks and 2 private sector banks has been assigned with the lead bank responsibility in 1779 districts in the country. 11 PSBs, one private bank is assigned with the state level bankers committee. So we are assigned in Kerala and Karnataka a state level bankers committee meeting. Lead district managers are the chairman of the block level bankers committee, the committee to meet quarterly. District level forum for bankers and government officials is district consultative committee. So chairman district collector is the form member is the chairman of the district level consultative committee. MD CEO of the convener bank is the chairman of the state level bankers committee meet. The committee has to meet quarterly. District level committee also to meet quarterly. Okay, then high level officials. Okay, this will leave it there. Now, 25%, this will let us not, sorry, okay. 25% of the banking outlets opened in a year by a bank should be in unbanked rural centers, Tier 5 and Tier 6. Under the general policy, there is people will cover that one there. Providing banking access to every village within 5 kilometer radius and banking access to every hamlet of 5,000 households in hilly areas. These are all the targets given under the lead bank responsibility. Achieving the CD ratio of 60% rural areas as well as in semi-urban areas. Dispensation with obtention of no due certificate by lending institutions in metro and urban centers also. Okay, these are all the lead bank. These are important points I have taken there. Any question asked, you should not miss. Let's quickly go through, sir. As per HO Circular 315/24, no, sorry, question number 53. As per HO Circular 283/24, who is the chairman of district level consultative committee? For the district level, it is the district collector. For SLBC, it is the MD and CEO of the convening bank. So this is district collector. Question number 53, answer is district collector. Then, question number 54. As per HO Circular 315/24, what is the processing charges along with the documentation and inspection charges to be collected from SHG at the time of credit linkage for loan amount beyond rupees 25,000 and up to rupees, for priority sector up to 25,000, you should not collect anything. In no processing, no charges. Now it is beyond 25,000 up to 5 lakhs. In our bank, what is the charges are being collected? So in our bank, beyond 25,000 up to 5 lakhs also for SHG, no processing or any service charge is not collected. So answer is nil. Then if the question is asked above 5 lakhs and up to 10 lakhs, if the amount, loan amount is above 5 lakhs up to 10 lakhs, 0.15% for working capital and 0.25% for term loan. Again, I repeat, if the loan amount is above 25,000 up to 5 lakhs, SHG credit linkage, no processing, no charges. If the loan amount is above 10 lakhs up to, above 5 lakhs up to 10 lakhs, the charge is 0.15% for working capital and 0.25% for term loan. If the loan amount is beyond 10 lakhs, for working capital it is 0.20 and for term loan it is 0.25. Okay, so up to 5 lakhs, there is nothing. Above 5 lakhs, 0.15 and 0. That is 25. And above 10 lakhs, it is 0.20. For term loan, it is the same, 0.25. So this is given in HO Circular 315/2024. Then, as per HO Circular 327/24, HO Circular 3, then a day NRLM, how much percentage of beneficiaries to belong to SC/ST category? 50%. 50. Answer for the question is 50%. Then dash percentage of DRI advances should be for SC/ST beneficiaries. You know what is DRI advance? Differential rate of interest scheme. What is the rate of interest? Reserve Bank of India fixes the rate of interest. It is 4% simple per annum. Then who is eligible? Rural and semi-urban areas, annual income does not exceed 18,000. In urban areas, annual income does not exceed 24,000. These people are eligible under DRI scheme. 4% interest rate you have to charge to the borrower. What is the maximum loan you will give? 15,000 rupees only maximum loan. If it is a housing loan for SC/ST borrowers, maximum 20,000 you can give. So normal loan under DRI scheme, you will give up to 15,000. If it is SC/ST borrowers for housing loan, you will give up to 20,000. Then some more conditions are there. 1/3 of the DRI advances of the bank should be routed through rural and semi-urban branches. 1/3 of the DRI advances should be routed through rural and semi-urban branches. Then 40% of the DRI advances should be through SC/ST beneficiary. 40% of the DRI advances to be through SC/ST beneficiary. 40% means 2 by 5. That is out of 5, 2. That is 40%. So 1/3 of the DRI advances should be routed to rural and semi-urban branches. 40% of the DRI advances should go to SC/ST beneficiary. This is the nutshell in DRI advances, sir. Dash percentage of DRI advances should be SC/ST beneficiaries, 40%. 2/5. Okay. What is the maximum housing loan that can be provided to ST/SC beneficiaries under DRI scheme? 20,000 rupees. Normal loan 15,000. So if it is for housing loan for SC/ST, we can give 20,000. For financing under DRI scheme, besides income criteria, I told you the income criteria 18,000, 24,000. For financing under DRI scheme, besides income criteria, the size of land holding should not exceed dash acres. Should not exceed dash acres of irrigated land and dash acres of unirrigated land, but it is not applicable for SC/ST beneficiaries. So, for financing under DRI, two conditions should be there: annual income as well as the irrigated and unirrigated land. The irrigated and unirrigated land condition is not applicable for SC/ST beneficiary, whereas the annual income is applicable for SC/ST beneficiary. For financing under DRI scheme, besides income criteria, the size of land holding should not exceed 1 acre of irrigated land and 2.5 acres of unirrigated land. Okay, sir. So please note this point because these are all the government related sponsored themes. Questions are there. Okay. Then, so as per question number 59, as per HO Circular 329, as per HO Circular 329 by 24 for Central Sector Interest Subsidy Scheme CSIS under Educational Loan 2022 for EL sanctioned on or after 1/4/22, if the loan amount is beyond rupees lakhs and up to lakhs, subsidy available irrespective of the third party guarantee or collateral. If the loan amount is beyond 7.50 lakhs and up to 10 lakhs, so subsidy is available. So we say above 7.5 lakhs, you have to take collateral, etc. No. So even though the loan amount is beyond 7.50 lakhs, but up to 5 or 10 lakhs, the subsidy is available as per Central Sector Interest Subsidy Scheme. So 7.5 and 10. Then next question number 60. These three questions, Central Sector, Dr. Ambedkar, and other things are there. Interest subsidy for education loan for students belonging to minority communities, pursuing master's degree abroad, Pado Pradesh, that is the educational loan. Interest subsidy scheme is available for loans sanctioned on or after 1/4/2013 up to 31/3/2022. To avail the subsidy, the annual income should not be, as per 355/24. To avail this scheme, the annual income should not exceed rupees 6 lakhs. So for this one, the annual income should not exceed rupees 6 lakhs. This is for master's degree abroad. So this here will for minority communities. Only the loan sanction between 1/4/2023 up to 33/2022. So the annual income should not exceed 6 lakhs. Here we have seen, here we have the another one. Dr. Ambedkar Central Sector Interest Subsidy Scheme on Education Loan for overseas studies for OBCs, and economically backward communities is available for educational loan is available for that is our educational sanctioned between dash dates. That is Dr. Ambedkar Central Sector Interest Subsidy Scheme on Education Loan for Overseas Studies for OBCs and economically backward communities available for EL sanctioned between 1/4/2024 till 31/3/2022. 1/4/2024 to 31/3/2022. Okay. The income criteria to avail the subsidy is not to exceed dash for OBCs and not to exceed dash for ABs, that is economically backward communities, 8 lakhs and 5 lakhs. Question number 62, answer is 8 lakhs and 5 lakhs. So why I have given these points here, the income criteria? No, the schemes have been discontinued. So up to certain 31/3/2022 is available. Still, that is the portal is there. You have to punch for this one. So what should be the income criteria? That is the main thing there. So this is given starting from these three HO circulars. That is why I have covered that. Then question number 23. 63. Employees, doctors, and professors of Manipal Education and Medical Group MEMG is eligible for certain concessions in housing loan and Canara vehicle under special package as per HO Circular 337/24. In detail, the retail lending people will cover this. As per the circular, the additional interest for acquiring third house unit under housing loan CRE is only 0.10%. Normally we charge 0.25, 0.50, etc. No, no. Under this scheme, the additional interest to be charged for third housing unit is 0.10% only. HO circular 63, sorry, HO circular 337 bar 24. What is the guideline as per HO Circular 8 bar 23 and 361 bar 24 in respect of LSR given by panel advocates. So legal scrutiny report. Two guidelines have come in HO Circular 8 bar 23 and another circular has come in HO Circular 361 bar 24. What the guideline says, sorry, what the guideline says. So as per HO Circular 8 bar 23, along with the LSR, the panel advocate has to include the search report details. So, as per HO circular, along with LSR, the panel advocate has to include search details. And as per HO circular 361 by 24, what he has to include. So as per the guidelines, LSR, along with the LSR, the panel advocate has to give the copy of the original title deeds. After visiting the sub-registrar office, he has to give. In some cases, that is the physical copy verification, etc., etc., in some of the sub-registrar office has been dispensed with. So online he has to do a in such cases as per HO Circular 361 by 24, where physical verification is dispensed with, online validation of mortgage documents in cases where physical verification in the books of the sub-register office is dispensed with. So, along with 8 bar 23, he has to give the copy of the search details of the CSSI. And as per HO Circular 361, besides that, wherever the physical verification of the documents is dispensed with in some of the sub-register office, online validation. He has to see online whether the same document is there and he has to give a certificate. These two things are given in these two circulars. That is a search report of SERSOI, that is online validation documents wherever the physical verification sub-register office dispensed with as per HO Circular 361 by 24. As per HO Circular 158 by 24, what is the purpose of Business Intelligence Report 371047C? I will tell. What is this 371047C? So far, it is not there. If you download the report, you will get branch wise, RO wise, circle wise, HO wise, non fund based sanctions between 2 days, which are all the NBF sanctions by head office, which are all the NBF sanctions by the circle for a branch between two given dates. If you generate the report, you will get so non-fund based sanction details unit wise you will get in 371047. That is as per HO Circular 158 but that is 24. Okay. As per HO Circular 469 by 24, branches to collect how much service charges with effect from 1/8/2024 for handling discrepant documents received under LC. Okay, 0.25% of the bill amount, 0.25% of the bill amount with a minimum of rupees 1000 and maximum rupees 5000 per bill. Again, I repeat. So, as per HO Circular 469 by 24, for handling discrepant documents received under LC, 0.25% of the bill amount with a minimum of rupees 1000 and maximum of rupees 5000. GST is extra. Who is the authority to permit renewal or extension of the bank guarantees in NPA account as per HO Circular 431 by 2024? RO head CAC. RO head CAC and authorities are empowered to renew the bank guarantee or extension of the bank guarantees NPA accounts as per HO Circular 431 by 2024. RO head CAC and above authorities. Then last question. I think only 68 questions. That's two questions are there. In respect of limits of rupees dash crores, passport detail above dash crores, passport details of promoters, directors, guarantor, etc. to be obtained and updated in CBS. Last class, I told you which are all the fast path in which you have to update certain parameters. The passport also I told you. So it is above 5 crores. Above 5 crores, valid passport should be there. Above 5 crores, valid passport should be there and you have to update. If there is no valid passport, you have to take an undertaking letter. Whenever he gets a passport, he will give to you. At the time of renewal or enhancement, etc., you have to review it. That's what the circular says. Above 5 crores. Question number 69. For exposures of above that in respect of all prospective borrowers, that is, if the borrowal account with an amount exceeding rupees 50 crores slipped to NPA, report to be obtained from the borrowers, about the borrowers from Central Economic Intelligence Bureau to be obtained for exposures above 50 crores, above 50, in respect of all prospective borrowers. And if a borrowal account with an amount exceeding 50 crores slips to NPA, so new borrower is coming, exposure required is above 50 crores, or a borrower account is slipping to NPA which a liability is 50 crores and above, then immediately the branches or the bank has to obtain a report for about the borrowers from the Central Economic Intelligence Unit Bureau to be obtained. Okay, sir. Then the last point, in your quickly we'll go through that presentation. So all the points are here, sir, in the presentation. Please go through CGTMSC. So CGTMSC cover a detailed circular has come in 433 by 2023. Then in I think 101 or 102 for 24, they have reiterated the guidelines. And then in 175 about 24, one additional point has been given. So quickly we'll go through 4 5 circulars and we'll conclude the session with regard to credit matters, and we will take up. I may be having another 1 hour, that is 1.5 hours. The remaining things I will conclude whatever possible deposit matters I will cover. Ceiling for coverage under CGTMSC. So CGTMSC is available for what loans, sir? It is available for MSC loans. It is not available for MSME loans. That should go in our mind. Many of us are thinking in the exam they are giving. So suddenly in between they give MSC or MSME. When you read in between the line, you will understand it is MSC, not MSME. Ceiling for coverage increased from rupees 2 crores to 5 crores. Okay. Annual guarantee fee is based on the loan amount. Next slide, I will show it to you. Amount of waiver of legal action while invoking guarantee enhanced rupees 10 lakhs rupees from 5 lakhs. Earlier it was 5, originally it was 1 lakh, now it has enhanced to 5 lakhs, now it is enhanced to 10 lakhs. Proposals with aggregate outstanding credit facility up to 500 lakhs that are internally rated low, normal, and moderate risk only to be considered for financing under CGTMSC coverage. Okay. Settlement of claim for waiver of legal action account. So, for how the settlement is done with regard, this is a change in 433/23. Single installment of claim settlement by reducing the guarantee cover by 15%. That is, if the original cover is 75%, if we tell CGTMSC, sir, for this legal action waived account, you give us 60% claim, we will wind it off. So that is one option. CGTMSC has come out with two options for legal action waived accounts, settlement of claims term. So if 75% original coverage, if you say reduce it by 15%, if bank accepts is to get the 60% coverage at one lot, then CGTMSC will do it. If bank says no, I want the 75% cover, I don't want the 60% cover, because originally you agreed for 75. In that case, what is the guideline? 2 installments. First, CGTMSC will give you 75%. The moment you invoke the claim as per the lock-in period, etc., CGTMSC will give you the 75% of that 75%. Let's assume the coverage is 75%. Coverage they covered. First, they will give you 75% of the coverage amount, and then balance they will give. Second is 25%. Second, when they will give after 3 years from the date of settlement of the first claim or OTS takes place, whichever is earlier. So two types of claims you can make. So reduce the claim from eligible from 75% by 15%, 70%. If it is 85%, reduce by 50 is 15, 80%. Accept for 70%. So you accept it like less than 15% original cover, then immediately you will get the claim. Or if you say you go for 2 lots, 75% of the originally agreed amount and 75 later, so 25 later, when you will get it after 3 years of the date of settlement of the first claim, or in between some OTS taken place immediately after settlement of the OTS. But bank has opted for the second one only. Bank has not opted for the first one. Bank has opted for the second one, claim settlement in respect of legal action waived accounts. So what is the CGTMSC coverage and delegation of branches? So if the account has to be covered 100% under CGTMSE, if the account has to be covered, up to 500 lakhs, so up to 10 lakhs necessarily CGMFU, CGTMSE, whatever it is. Above 10 lakhs up to 500 lakhs, so you can cover an entire amount you can cover under CGTMSE or one portion CGTMSE, one portion collateral, or for an entire thing collateral. That there is discretion between you and the borrower. Okay, suppose you want the entire amount to be covered under CGTMSE and the loan amount other than non-schematic MSME loan and the loan amount is above 10 lakhs up to 500 lakhs, there will not be any collateral because you are covering entire thing under CGTMSE. In that case, even though the loan amount is 11 lakhs, 12 lakhs, more than 10 lakhs, it has to be sanctioned by the next higher authority. For branches attached under MSME Sulabh is the next higher authority. Okay, if you have hybrid model, one portion is security, one portion is CGTMSE. That is called hybrid model. If the loan amount is above 10 lakhs up to 500 lakhs, and if this collateral security, I told you one portion collateral, one portion security. If you are taking collateral security less than 50% of the loan amount, then that loan also to be sanctioned by the next higher authority only. And if the loan amount is above 10 lakhs up to 500 lakhs, if the collateral is 50% or more than the exposure, then the respective sanctioning authority can sanction that. Okay, MSME Sulabh is the next higher authority for branches attached to MSME Sulabh. Proposals with aggregate credit facilities up to 500 lakhs that are internally rated low, normal, and moderate risk to be considered for financing under CGTMSE coverage. Then, what is a maximum guarantee coverage where the credit facility is available? If it is micro, up to 5 lakhs, more than 5 lakhs, up to 50 lakhs, and then more than 50 lakhs, less than equal to 5 lakhs, depending upon the segment, category of the borrower, the percentage of guarantee is available. The maximum guarantee cover is 85% and the minimum guarantee cover is 75%. Okay, somewhere. So this you should know, sir. What is a guarantee cover? Loan amount and the segment. So if it is micro sector, loan amount up to 5 lakhs, 85%, 75%, 75%. MSC is located in this region and these people, like this, the guarantee coverage is there. Okay, what is the standard rate, what is the premium you have to pay, either on the liability or loan sanctioned amount. We have the various scheme guidelines, isn't it? If it's working capital, on what we have to pay the premium. If it's a term loan, what we have to pay the premium. All those things are the existing guidelines. There is no change. So the premium, the annual guarantee fee with effect from 1/4/2023. What is the guarantee? So loan amount up to 10 lakhs, like that they are segregated. Earlier it was not there. Depending upon the loan amount, the guarantee fee is fixed by CGTMSE. So we have a standard rate and we have a rate with risk premium. So what is the standard rate? So standard rate and rate with risk premium. So the standard rate prescribed by CGTMSE is 0.37%, like that, depending upon the loan. If it is if the risk premium is 15%, 15% on 0.37%. So if the risk premium is 15%, then the rate becomes 0.43. Like that, the rate will be increasing depending upon the risk premium. Now you should know what is the risk premium. The risk premium will vary from bank to bank. Based on what CGTMS every year fixes the risk premium. It depends upon the risk premium depends upon the NPA portfolio in the CGTMSE covered accounts. So in the CGTMSE covered accounts, what is the NPA portfolio? Then claim payout ratio. Last year, how much Canara Bank has claimed under CGTMSE, how much CGTMSE has paid. Then what is the quick mortality accounts covered under these CGTMSE covered accounts? The NPA is more, or the claim payout is more, or the quick mortality ratio is more, then the risk premium will increase. When the risk premium increases, the premium to be paid under each types of loans also will vary. For example, you see, loan amount above 200 lakhs up to 500 lakhs, the standard rate prescribed by RBI, sorry, for CGTMS is only 1.35. If the risk premium is 70%, then the borrower has to pay 2.30%. So risk premium depends upon all these things that you should know. Then then now there is a change in HO circular 175/24. So there is no change after 453, so 33/23 introduced. So the change has come in 175/24 with regard to So in case of waiver of obtention of CGTMSE cover, so the borrower gives only collateral. So above 10 lakhs up to 500 lakhs, the borrower is not going to be covered under CGTMSE. He opts for only giving collateral. You have to waive the CGTMSE. So in that case, you have the option either go for 100% CGTMSE or collateral hybrid or only collateral. If the sanctioning authority decided to go only for collateral, so in that case, waiver after you have to waive the CGTMSE cover. What is the guideline for the new borrower and for the existing borrower? When you can waive CGTMSE cover, if it is a new borrower, the borrower provides primary security or primary and collateral security put together in the form of vacant land, land and building, approved securities to the minimum extent of 125% of the sanctioned limit, then only you can waive the obtention of the CGTMSE cover. Vacant land can be accepted as collateral security to the maximum extent of 25% of the stipulated security comfort in terms of value, provided it has clear demarcation and boundaries with approach roads, which is approved by any competent authority, etc., etc., SAFASI compliant. Borrower is rated as low, normal, and moderate risk. So this is the guideline. Whenever a new borrower approaches you for a loan, when the loan amount is about 10 lakhs up to 500 lakhs, he is an MSC borrower. He wants waiver of CGT MSC cover. He gives only collateral. So this is the condition for the existing borrower. The borrower provides primary security or primary and collateral security put together in the form of land and building to the extent of 75% of the sanction limit. In addition to the security of assets created out of our finance, there are only 125% straight away for this one here. In addition to the security created out of our finance, 75% of the things he has to bring. Accounts to be rated up to moderate, that you know. All account of the borrower should be classified as standard asset. Sanctions to be reviewed and confirmed by the next higher authority. The examples I have given, let's not waste time on that. Okay, sir. Quickly, we'll go through this question and wind up the session, sir. Which of the following is not a guideline with regard to CGTMSE coverage as per HO Circular 175/24? CGTMSE coverage can be waived in respect of a new borrower if he provides primary and security, primary and collateral security put together in the form of land and building maximum 125% of the sanctioned limit. That is correct. Vacant land can be accepted to the maximum of 25%. That is also correct. In the case of existing borrower, the borrower provides primary security or primary and collateral security put together in the form of land and building to the extent of 75% sanction limit, or that is more than, or in addition to the security of assets created out of our finance. That is also correct. The borrower should have been rated as low, normal, and moderate risk. So which is not correct. So here I have put only rated low and normal risk. So it should be low and moderate. You can cover low and moderate and normal also. So which is not correct. So point number D is not correct, because point number D I have put only up to normal risk. Moderate risk also you can cover. That is the only change that has come in HO, that is with regard to CGTMSE. Question number 70, the answer should be D. Question number 70, the answer should be D. Okay, sir. So I'm winding up that point. Now, I will be quickly going to, that is your, 1 minute, sir. I'll be going to your deposit related matters, please. Go through it. Please bear with me. PPT, deposit PPT. Okay, this I will open. Okay, good. It has opened now. Then the question paper also I will download, sir. Deposit. Where is that? MCQ deposit policy. Oh, okay. This also you have to open. Okay. Now, so we are going to the deposit. So so the deposit policy of the bank has come, and every time the bank is also coming out. Some, if you see it, no, the bank is coming out with the interest rate circulars. Frequently it is coming. The interest rate circulars contains a callable deposit, non-callable deposit, then bulk deposit and bulk callable and non-callable deposit. So many confusions are there. Okay. So any question may be asked from the deposit policy. So mostly I'll be confining to, that is up to your FCNR. RFC I have not covered there. In the Forex class comes, we will cover over that. So deposit related matters. So I have taken what Reserve Bank of India is telling and what Canara Bank is doing. So in the question paper, as per RBI master direction, if any question comes, you should know the RBI guidelines, then you have to tick the correct answer. So whenever that what the RBI guidelines is with regard to interest rates on deposit and what Canara Bank has implemented, whatever Canara Bank has implemented, it should be within the overall guidelines of the RBI. So people who go for 4 to 5 or 3 to 4, this RBI guidelines also you should be able to answer or you should be able to tell. That is why I have made this presentation. Deposit related matters, RBI master direction on interest rate on deposits, March 2016. It is updated till 7/6/2024. So the master direction has been issued by RBI in 2016 March. Then subsequently, whenever there is an updation comes, they will go to the master circular and update the guidelines in a different color. Okay, it's beautiful. If you go visit the RBI site, you will come to know how beautifully they are doing it. So why they updated on 7/6? On 7/6/2024, a guideline has come with regard to bulk term deposit. So when the guideline has come, immediately they will go and update in the master direction. They will not going on issuing every time a fresh master direction. One master direction will be there. Whenever change is there, so they will implement it in the in the master direction. The latest change is 7/6/2024. It is mentioned over there with regard to bulk deposit. Then our bank has issued a deposit policy for the bank for the year 2024-25 based on the guidelines given by RBI. Then interest rate on deposits, various circulars have come for domestic deposit, NRO, NRE, etc. It starts from 97, 435, 4 like that, etc. And other circulars mentioned against the questions I will be covering on the deposit related matters. Okay. The periodicity of crediting, yes. So quickly we'll go through the presentation, sir. You'll be understanding it, deposit related matters. Then I have given the RBI master direction and what Canara Bank is doing. Coming to current deposit, no interest is payable. In our bank also, we don't pay any interest on the current deposit. But when interest you can pay for the current deposit, current account it stands in the names of individuals, all sole proprietorship, sole in a proprietorship concern, or current account is standing in the name of an individual. Interest will be paid from the date of death of the depositor or from the date of death of the proprietor till the payment, till the death claim is settled. You have to pay SB interest rate prevailing on the date of payment. Whatever SB interest rate is prevailing on the date of payment, so you have to pay interest for the current account at the time of settlement of death claim only in respect of individual current account holders or sole proprietorship account. In our bank also, we are doing the same. We are doing something more also in our bank. Same as RBI guidelines. In our bank, we pay interest at SB interest rate for the credit balance in the for the credit balance in ODOCC. So besides the current account in the name of individual or sole proprietorship, in the case of an individual or sole proprietorship having an ODOCC account, so at the time of death, there is a credit balance is there. For that credit balance also, we are paying SB interest on the date of settlement. In joint account, the benefit of interest is available only when all the joint depositors die. Okay, we are also implementing the guideline. Then SB deposit. In SB deposit, you have domestic SB deposit, NRO SB deposit, and NRE SB deposit. Only NRIs can open NRO SB deposit and NRE SB deposit. They can open. Once the resident individual becomes NRI, all his resident accounts, as per FEMA guidelines, bank has to convert them into NRO SB or NRO term deposit. Again, I repeat, once a resident has become an NRI, and if the bank comes to know that resident has become NRI, all his resident accounts, domestic SB account or domestic term deposit account, to be converted into NRO. And for opening an NRE account, from there, from abroad, after going abroad, an NRI can open an NRE account. Okay, what is the interest rate guideline? Interest to be paid on daily product basis. Yes, in our bank also, at the end of the day balance, what is the balance? We take it and pay interest on the daily product basis. A uniform interest rate shall be set on balance up to rupees 1 lakh, irrespective of the amount in the account within this limit. So, uniform interest rate shall be set on balances up to 1 lakh. That is, If you want to give differential interest rate for the SB deposit, yes, there also you can give, but up to a balance of 1 lakh. End of the day, balance up to 1 lakh. It may be 10 rupees, or it may be 50,000 rupees, or it may be 1 lakh. Up to the end of that is as on the date of the end of the day, if the balance is up to 1 lakh, irrespective of the amount, you have to pay only a same rate of interest. If you want to pay a differential rate of interest, you can pay only when the balance is above 1 lakh. Okay, that's what the guideline. So differential interest rates on interest of interest may be provided for any end of the day savings bank balance exceeding rupees 1 lakh. But as on date, we are not paying that any additional. So we are paying additional interest above 50 lakhs only. Up to 50 lakhs, we are fixed. Above 50 lakhs, we are having. So latest interest rate circular, HO circular 767 bar 2022 with effect from 21/12/2022. You see that okay, next slide, we will see that. Okay, so sorry. Hmm. Interest on savings deposit shall be credited at quarterly or shorter intervals, including for frozen by the enforcement authorities, irrespective of the operative status of the account, whether inoperative or operative. So, what RBI says, you can credit the interest to an account, SB account, either on a daily basis or weekly basis or bi-weekly basis, bi-monthly basis, whatever it is. But minimum once in a quarter, interest should be credited to the SB account quarterly or lesser intervals. In Canara Bank, what we are doing? So beyond once in quarter, you should not credit. Once in a quarter, interest should be credited. In Canara Bank, interest is credited on a daily product basis once in a quarter. As on the 1st February, 1st May, 1st August, and 1st November, once in 3 months, we are crediting SB account to the account. RBI says you can credit even less than once in 3 months. So as per RBI guidelines and as per our bank guideline. Then this is the existing SB interest rates are either for domestic deposit, NRO and NRE. This is HO Circular 767 by 2022 with effect from 21/12/2022. It continues. For outstanding balance of less than 50 lakhs, 2.9, the RBI says up to 1 lakh, you have to give the same rate of interest. Above 1 lakh, you can give differential rate of interest. In our bank, what we did, up to 50 lakhs, we are giving the same rate. Above 50 lakhs, up to 4, 5 crores also, we are giving 2.5, and above 5 crores to less. So that means when you are giving the slab, up to 1 lakh, the rate of interest should be the same. Any differential you want, you can give above 1 lakh. So accordingly, we are giving up to 50 lakhs, even up to 5 crores, we are giving the same rate of interest here, but we are given two slabs. There is a possibility here the rate may undergo a change. That means basically up to 50 lakhs, we are giving the same rate of interest. RBI says if you want to give differential interest, you have to give above 1 lakh only. But up to 50 lakhs, we are giving the same rate of interest. This is the slab, sir. So minimum 2.50% and maximum 4% for SB on a daily. Suppose at the end of the day, if is maintaining 2,000 crores, for that day, you will give 4% SB interest for that SB account. Interest is credited once in a quarter in Canara Bank. Okay. Then let's quickly go through the questions on SB. Then we'll come here, sir. The periodicity, question number one, the periodicity for crediting SB interest by any bank in India as per RBI guidelines is, so the periodicity for crediting SB interest. So whenever they say RBI guidelines or whenever they say RBI master direction in the question, we should be able to know what is the RBI master guideline or master circular. So that is why I have given it. And when they are not mentioning RBI guidelines, RBI master circular, the question belongs to our bank policy. That's all you should understand. The periodicity for crediting SB interest by any bank in India as per RBI guidelines is first day of the calendar quarter, quarterly intervals, 1st February, 1st May, 1st August, and 1st November. 1 minute. And first November, quarterly or lesser intervals. In our bank, if it is in our bank, it is C, it is RBI guidelines, quarterly or lesser intervals. The question is as per RBI guidelines. For question number one, the answer is D. Okay, if they ask what is the periodic interest credit, like that, just they mention RBI guidelines, you have to mention point number C. If it is RBI guidelines, it is quarterly or lesser intervals. Question number two, which slab does not find a place in interest rate for domestic and NRO and SB, NRE SB as per HO Circular 767 by 2022. Once they ask how many slabs are there, in the interest rate circular, HOS circular 767/2022, how many slabs are there? Once they ask, what is the minimum in the slab amount in the slab? What is the maximum amount in the slab? So that means 767/22, you should know. So which slab does not find a place in the interest rate for domestic NRO and NRESB as per HO Circular 767/2022 with effect from 21/12/2022. For balances rupees 50 lakhs, yes, we have a slab. For 50 lakhs to less than 1 crore, we do not have a slab. For 50 lakhs to less than 5 crores only, we have a slab. So point number B is not there. Let us see whether point number C is there. Yes, 5 crores to less than 10 crores, yes, we have a slab. 2000 crores and above, we have a slab. Which slab does not find a place? Question number 2, answer should be B. Question number 2, the answer should be B. The correct answer is 50 lakhs and above to less than 5 crores. You see the slab? 50 crores. See, that is 50 lakhs to less than 5 crores. We don't have a slab, 50 lakhs to less than 1 crore. So point number, that question, the answer should be which does not find a place. So your answer should be point number B. Okay. Question number 3. As per RBI master direction on deposits, differential interest rate for SB deposit can be paid by a bank provided the balance exceeds rupees 1 lakh. I already told you. Question number 3, answer is D. Question number 3, answer is D. Question number 4. For calculating interest on SB deposits as per RBI notification, banks to take daily product, daily minimum product, monthly minimum product, monthly product. There is balance between fifth and last day of the month. So we have to take daily product basis. Question number 4, answer is A. Question number 4, in our bank also we have to take. Question number 4, answer is A. Question number 5. As per RBI master circular, to earn interest in NRO, and so now, so SB more or less we have seen. Then we in detail we see the deposit policy later part of the question paper. Now we are just comparing RBI guidelines and our bank guidelines. Then we are going to term deposit. What RBI guidelines is, what Canara Bank guidelines is. Okay, term deposit. SB and current overall we have seen. So to earn interest, minimum period of the term deposit in as per RBI guidelines, if it is domestic term deposit and NRO term deposit, to earn interest, minimum number of days should be 7. That is before the deposit is closed, before 7 days of opening or before 7 days of renewal. For that deposit, if it is domestic or NRO, those deposits will not earn interest. So for NRE and FCNR deposit, either a renewed deposit or freshly opened deposit, the minimum period should be 1 year. If they are closed before 1 year, no interest will be payable. So what RBI Canara Bank says, in Canara Bank also, to get a interest for deposit, the minimum should be 7 days. So to get interest. So in common deposit, so what we told 5 months. Let us assume a person is opening a common deposit 6 months. So we should open for cumulative interest. He has to open a common deposit for minimum 5 months or recurring deposit minimum 6 months. If he closes before 6 months or if he closes before 5 months, whether we will give interest? Yes, we will give interest provided those two deposits have run for more than 7 days. Whatever is simple interest, whatever we will give. What RBI says, domestic and NRO deposit to earn interest should continue with you for a minimum 7 days. So you take common deposit, if you close before 5 months, whether you will not give interest, you have to give interest because if it is more than 7 days, it stayed with you. Similarly, recurring deposit, if stayed with you for more than, it should be minimum 6 months. If it is closed before 6 months, if it stayed with you for more than 7 days, you have to give interest, simple interest, penalty, etc., etc. That we will see in the deposit policy. Okay. Then maximum period. What is the maximum period a deposit can be accepted as per Reserve Bank of India guideline? So Reserve Bank of India has not fixed what is the maximum period you have to accept for a domestic deposit, NRO deposit, NRE deposit. They have not fixed the maximum period. But they have fixed the maximum period, FCNR deposit, maximum 5 years. Beyond 5 years, FCNR deposit cannot be opened. What we do in Canara Bank, we open, if you see the interest rate slab, domestic deposits and NRO deposit, minimum period we are kept 7 days and maximum period we are kept 10 years. In the case of a minor's deposit or deposits deposited by a court, even more than 10 years also we permit after getting permission from various authorities. So, Reserve Bank of India has not fixed the maximum period for which a deposit has to be accepted by bank except by FCNR deposit. FCNR deposits maximum to be accepted by 5 years by any bank operating in India. So, in the case of Canara Bank, maximum tenor of domestic and NRO deposit is 10 years. NRE deposit is also 10 years. We have fixed the maximum. FCNR is 5 years. Deposit under court order and minor deposit more than 10 years also we can accept. So the maximum period don't say it is 10 years fixed by RBI. It is taken decision by Canara Bank. Okay. No restriction in minimum or maximum amount of deposit. So RBI says even 10 rupees you accept a term deposit, open a term deposit. If it remains with you for 7 days, give some interest to the deposit of 10 rupees. So even 10,000 crores you accept. To get an interest for the 10,000 crores, you should be remained with you for a minimum of 7 days. That's all they say. Maximum they are told. They are told minimum and maximum amount that can be accepted in a term deposit. What Reserve Bank, what Canara Bank says. Fresh domestic and NRO deposit will be accepted for 7 days. For 7 days if the amount is rupees 5 lakhs and above. So in Canara Bank, so RBI has not given any restriction for the amount. So, but RBI has given the restriction for 7 days. So we are accepting a domestic and NRO deposit minimum 7 days, provided the amount should be 5 lakhs. Less than 5 lakhs, if the amount is there, we accept it only for 15 days. Let's assume we accept it for 15 days. After 7 days, he is closing. Yes, that is permitted. You will charge pre-penalty charge. That's all. So, in Canara Bank, the fresh domestic NRO and domestic deposits accepted for a minimum period of 7 days if the amount is that is 5 lakhs and above. Amount is 5 lakhs and above. If the amount is less than 5 lakhs, you will accept minimum for 15 days. For less than 5 lakhs, minimum period is 15 days. NRE, no minimum or maximum amount. For NRE, we are not fixing any minimum or maximum amount. FCNR, minimum 500, either in US dollar or in euro or in Great British pound or Australian dollar or Canada dollar, that is Canadian dollar. We accept 500 respective currencies. In respective currencies, maximum, there is no restriction. So this is what RBI says and what Canara Bank says. Okay, next slide we'll see. Interest rate for NRE, NRO term deposit should not be more than domestic rupee term deposit. So you are accepting domestic deposit, you have various slabs, 7 days to 45 days, 46 days to 60 days. Like that, you are having various tenor, no? That is called a tenor or slab. So for example, for domestic deposit for 1 year, or let us assume for domestic deposit for 5 years, as on date, you are giving 6.70. I am talking about non-callable. So I talk about callable deposit, forget about non-callable, etc., etc. For domestic deposit for 5 years, for a general public, you are giving an interest of 6.70. So similarly, for NRO and NRE, you have to give either 6.70 or less than 6.70. So that is what the guideline says. Interest rate for NRE and NRO term deposit should not be more than rupee domestic term deposit. For domestic deposit, if you are giving for 5 years 6.70, for NRE and NRO also, you should give 6.70 or you can give less than 6.70. You should not give more than 6.70, what Canara Bank has done. In our bank, interest rates for NRE, NRO term deposits are the same as that of domestic term deposit. So we are not given lesser interest. We cannot give more than domestic. We are giving the same rate of interest. Then the maturity period tenor of the FCNR deposit is fixed by RBI for all banks. So what is the maturity period? What is the maximum period you can accept the FCNR deposit? What is the tenor? The slab. The slab, no? The slab, the minimum period, the maximum period, and the slab in which you can accept FCNR deposit is decided by RBI. It is fixed by RBI. Next slide we will see. In our bank also, we have to implement the RBI guideline. Interest rate for the FCNR deposit to be fixed every month. See, if you see HO circular, Interest rate for FCNR deposit, every month the rate will come for all the five currencies. Every month the interest rate circular will come. Whereas for domestic deposit, NRO deposit or NRE deposit, either bulk or other than bulk, interest rate circular will come at any point of time because it depends upon asset liability management of the bank. Whereas for FCNR deposit, interest rate circular will come every month. So interest rate for FCNR deposit to be fixed every month based on maximum, based on that is a maximum a bank can offer under FCNR deposit is linked to alternative reference rate. Next slide, I will tell you. It is same in our bank also. Banks can fix differential interest rates on FCNR deposit based on the currency-wise quantum, but it should not exceed the maximum permissible rate. Same as per RBI guidance, interest rate for September 2024, HO Circular 636/24. Next slide, we will see. Okay, I told you the tenor of the FCNR deposit, that is the slab in which banks can accept FCNR deposit, is the same for all banks in India. You cannot change the slab. For example, domestic NRO, NRE. NRE should be minimum 1 year. Domestic and NRO should be minimum 7 days. Then afterward, you can fix any slab. But coming to FCNR, so minimum 1 year you have to fix and maximum 5 years to fix. In between that also, the tenor should be the same. Here you cannot make any change. What is the tenor? The tenor should be 1 year to less than 2 years, 2 years to less than 3 years, 3 years to less than 4 years, 4 years to less than 5 years, 5 years only. In all banks, any circular, if you see, the FCNR deposit circular will have only 1, 2, 3, 4, 5 tenors only. No bank can change the tenor. No bank can reduce the minimum period. No bank can increase the maximum period. Whereas in the case of domestic NRO and NRE, the minimum should be 7 days. Maximum can be anything. The tenor can be anything, but that is not possible in FCNR deposits that is controlled by Reserve Bank of India. But on the other hand, the rate of interest within the tenor can vary between bank to bank. Reserve Bank says what is the maximum rate of interest you can give under each tenor? What is the maximum interest you can give in a month? It can be less than the maximum rate. So in one bank, if dollar is more, they will give a higher rate of interest, but it should not exceed the maximum level fixed by RBI. What is the maximum interest rate you can fix for FCNR deposit on different currencies? We will see in the next slide. Okay. So maximum interest rate for FCNR deposit to be fixed by every bank for every month. Banks can fix below the maximum permissible rate also. So RBI says this is the maximum rate for this month FCNR deposit. You can either fix FCNR deposit that rate or less than that rate also. Okay. So interest rate, the slab and tenor will be the same, minimum and maximum period will be the same, but interest rate for FCNR deposit may vary from bank to bank, but the tenor will be the uniform for all banks. Let us see how the interest rate for FCNR deposit is fixed. So interest rate for FCNR deposit is fixed based on overnight alternative reference rate. We generally say ARR, overnight alternative reference rate. Earlier, interest rate for FCNR is fixed based on LIBOR rate, London Interbank Offered Rate. Now that has been discontinued 2, 3, 4 years back, and we are having only alternative reference rate. Who gives the alternative reference rate? That we will see. Banks to fix FCNR rates based on alternative reference rate. Alternative reference rate is published by Financial Benchmarks India Private Limited, FBIL. Every month, FCNR rates to be fixed based on the ARR of last working day of previous month. So, maximum interest rate banks can fix for FCNR deposit is as under. I will tell you. So, I told you minimum period is 1 year. The tenor is 1 year to less than 2 years, 2 years to less than 3 years, 3 years to less than 4 years, 4 years to less than 5 years, 5 years only. Okay. So whenever you are going to fix the interest rate for FCNR tenor 1 year to less than 2 years, 2 years to less than 3 years, how much maximum rate you can fix for that month for that currency? Overnight alternative reference rate for the respective currency or swap rate for the respective currency plus 250 basis points. Let us assume we are in the month of October. For October, Canara Bank has to fix the interest rate for FCNR. In how many currencies we are accepting FCNR today? US dollar, euro, Great British pound, Australian dollar, and Canadian dollar. Five currencies. Let us assume we are on first October 1st or October 2nd, whatever it is, we are going to fix the FCNR rate for the month of October. Then let us assume US dollar 1 year to less than 2 years, let us assume, or 2 years to less than 3 years, anything. Both the maximum is the same. For example, so US dollar, so the FBIL will publish as on the last working day of September, for 30th September, for US dollar, so what is the alternative reference rate for 1 year? For US dollar, what is the swap rate for 1 year? So banks have to go and choose the alternative reference rate or the swap rate, whichever is preferable to them. Along with that, they can add only 2.50% maximum. Again, I repeat. Let us assume Canara Bank is going to fix US dollar rate for 1 year to less than 2 years for the month of October. On 30th September, that is, they will take what is the alternative reference rate or swap rate given for US dollar 1 year to less than 2 years. It will be available in that site. So go to that site, take the alternate reference rate given by the FBIL for 1 year to less than 2 years. Let us assume it is 1%. So for FCNR rate for US dollar next month, how much Canara Bank maximum fix for 1 year to less than 2 years? What is the alternate reference rate given there? 1%. So as per the guidelines, you can give maximum plus that is 250 basis points, means 2.50%. So the alternative reference rate given for 1 year to less than 2 years US dollar is 1%. So banks can give maximum 1 plus 2.50, 3.50. If some banks feel they will give only 1 plus 1, it is okay. But you should not exceed more than 1 plus 2.5. That is, it should not exceed more than 3.50%. So this is applicable for deposit for 1 year to less than 2 years and 2 years to less than 3 years. If the deposit is 3 years and above and up to including maximum, it should not go more than 5 years. Same alternative reference rate for that particular currency for that particular period plus 350 basis points, 3.50 you can go. Earlier, forget about earlier here. Earlier, it is based on the LIBOR rate. So this is the way FCNR deposits are fixed by banks in India. So FCNR interest rates for HO circular 690/24 with effect from 4/10/2024. That is the latest circular available in your CANNET. And then for September 2024, it was HO circular 636/2024. So this is September rate and this is October rate. So every month, the FCNR rate will be decided by the banks taking into account the alternative reference rates up to 3 years, 2.50 basis points plus 3 years and above up to 5 years, 350 basis points or 3.50%. Okay, here you see Reserve Bank of India has given freedom to banks to fix different interest rates for different currencies depending upon the ARR. Here, you can give different interest rates for the amount also. But however, you have to ensure that the maximum rate should not exceed 2.50 or 3.50. In Canara Bank, as on date, we are giving differential interest rate only for US dollar FCNR deposit less than 1 lakh and US dollar above 1 lakh. For less than 1 lakh, we are giving 5.45. For more than 1 lakh, so we are giving 5.55. So this 5.55 should not be more than 1 year to less than 2 years. This 5.55 should not be more than alternate reference rate as on 30th September for 1 year to 2 year for US dollar plus 2.50%. If you go and see, it should not have exceeded. So, as on date, Reserve Bank of India has given freedom to banks to fix differential interest rate for different amount under a foreign currency, different interest rates, but the maximum interest rate should not exceed the 250 basis points or 350 basis points. For US dollar only, as on date, we are giving less than 1 lakh and above 1 lakh US dollar differential interest rate. For all other currencies, we are not giving differential interest rate. Let's quickly go through the questions, sir. Quickly go through the question, but then otherwise it will be continuously. If you see this, it will be boring for you also, for me also. Okay, let us go through. What is the question? You'll understand now. Okay. SB is over. So as per question number 5, we are going through. As per RBI Master Circular, to earn interest in NRO and domestic term deposit, minimum tenor of the deposit is 7 and minimum amount is dash. So as per RBI Master Circular, 7 days and 5 lakhs. No, RBI has not told like that. 15 days irrespective of the amount. They have not told like that. 7 days and any amount. Yes, as per RBI direction, to earn interest on NRO and domestic term deposit, the minimum period should be 7 days and any amount. So answer for question number 5. Answer for question number 5 is C. If it is our bank, minimum 7 days and minimum amount should be 5 lakhs. If the depositor is going to deposit less than 5 lakhs, minimum 15 days he has to deposit in Canara Bank. So for question number 5, answer is C. Question number 5, answer is C. Question number 6. What is the maximum period for which banks operating in India? So banks operating in India as per RBI guidelines. As what is the maximum period for which banks operating in India can accept NRO, domestic and NRE term deposit, RBI guidelines. 10 years, 10 years and minus deposits under court order can be accepted for more than 10 years, 5 years, none of these. The answer for question number 6 is none of these because the RBI has not fixed the maximum tenor for domestic NRO and NRE. We have fixed 10 years and for court order etc. we have fixed more than 10 years also. So answer for question number 6 is D, none of these. Question number 7. As per RBI guidelines, interest rate for NRE, NRO term deposit of similar maturity are to be. So interest rate for NRE and NRE term deposit of similar maturity should be the same as that of domestic deposit. Yes, they told that is what they told. Whether they told same, no, they are not told the same. Equal to or more than the domestic term deposit. They are not told like that. Should not be more than domestic term deposit rate. Should not be more than domestic term deposit rate. C, to be less than the domestic deposit rate. I told you as per RBI guidelines, interest rates for NRE and NRO term deposit of similar maturity should be either same or what they told only one thing. It should not be more than domestic rate. So that means it can be either the same or less than the domestic deposit rate. But as per RBI guidelines, interest rate for NRE and NRO term deposit of similar maturity should not be more than domestic term deposit rate. Question number 7, answer is C. Question number 7, answer is C. Question number 8. Banks in India have same tenor for which type of deposit. Tenor means the slab, the period for which you are accepting the deposit. It is for FCNR deposit. Question number 8, answer is D. Question number 9. As per RBI guidelines, banks to have necessarily permit. Okay, then we will go to the presentation. Then you will understand. Okay. Then some things are there. So now in term deposit, we have seen the period, minimum period, tenor, minimum amount, maximum amount, etc. We have seen up to FCNR. Now, what is a bulk deposit? What is a bulk deposit? I told you the bulk deposit definition underwent by a change by RBI on 7/6/2024. On 7/6/2024. That is why the master guideline on deposits, master direction has been updated on 7/6/2024. What is the meaning of a bulk term deposit? So, SB deposit, differential interest you will give when the balance is above 1 lakh. Coming to a bulk term deposit, when differential interest rate can be paid, when the deposit is a bulk deposit or when it is a non-callable deposit. When it is a bulk deposit, what is the definition of a bulk deposit? As per the RBI direction 7/6/2024, bulk deposit means the single deposit of rupees 3 crores and above with effect from 7/6/2024. Bulk deposit is applicable for domestic term deposit, NRO term deposits, and NRE term deposits also. It is not available for FCNR. FCNR, RBI has given freedom to fix different interests for different, amount of deposit and different currencies. We saw US dollar less than 1 lakh, US dollar above 1 lakh. So bulk deposit means rupees 3 crores and above, single bulk term deposit of 3 crores and above with effect from 7/6/2024 for scheduled commercial banks, including small finance bank, but excluding regional rural banks and local area banks. Bulk area, the bulk is earlier it was 2 crores for them. Now originally it was 1 crore. In 2023 they made it 2 crores. Now in 2024 they made it 3 crores and above. That is the definition of a bulk deposit. So for regional rural banks and local area bank, bulk deposit means 1 crore and above. Earlier for them it was only 15 lakhs. Okay, you should also know. For a regional rural bank and local area bank, bulk deposit definition means 1 crore and above. Earlier it was 15 lakhs and above. In our bank also, we are calling a deposit as a bulk deposit if it is 3 crores and above. Then next point, what is RBI guideline says? All term deposit accepted from individuals, including all term deposit accepted from individuals, including joint deposits of individuals for rupees 1 crore and below, should have premature withdrawal facility. Now, whether so when you are depositing money in the bank, whether bank will permit you premature closure? Yes, banks have that is if the deposit is accepted from individual and non-individual. You have to segregate two things. Deposit is accepted from individuals. Deposit accepted from non-individuals. Non-individual means entities. If the deposit is accepted from individuals, if the deposit amount is up to 1 crore, a single deposit up to 1 crore, and if the deposit is accepted from individuals, banks should necessarily permit before maturity closure. That is called a callable deposit. So if the bank will not, so that is if the amount is up to 1 crore, including 1 crore, and if the deposit is accepted from the individuals, then before maturity closure should be permitted. So if the deposit is accepted from non-individuals, irrespective of the amount, bank can say we will not permit before maturity closure. That means the callable deposit concept is for a domestic for is must for a deposit which is accepted from individual. As per RBI guidelines, all deposits accepted from individuals up to 1 lakh up to 1 crore including 1 crore should necessarily have the premature closure withdrawal. For a non-individual, if you don't want a premature withdrawal, you can say, I will not permit before mature withdrawal, irrespective of the amount. What Canara Bank is having, we will see separately. This is RBI guidelines. So we have callable and non-callable term deposit for domestic NRO and NRE. What is callable? Before maturity closure is permitted. What is non-callable? Before maturity closure is not permitted. So we have not distinguished between individuals and other than individuals. RBI says if you want to distinguish between individuals and non-individuals also, you can do. His condition is, RBI condition is up to 1 crore, including 1 crore, deposits accepted from individuals, either single or joint name, should have before maturity closure option. They should be callable. But that is a minimum condition they are fixed. So your condition can be, you should cover that minimum condition, then any other condition you can fix. Okay. We have callable and non-callable term deposit for domestic NRO and NRE. Non-callable deposit can be accepted from individuals for more than rupees 1 crore. So, I told you, what is non-callable? No before maturity closure is permitted. So, no before permitted, you should not tell to individuals if the deposit is including 1 crore. That means Canara Bank is accepting non-callable deposit from individuals also only when the amount is more than 1 crore. Less than 1 crore, we are not accepting from individuals any non-callable deposit because you should necessarily permit the premature closure. Then banks have the discretion to offer additional interest to senior citizen domestic term deposit. Additional interest to NRO, NRE, FCNR deposit is not permitted for senior citizen. If the deposit is a domestic term deposit, then additional interest for senior citizen general public is permitted. Reserve Bank of India has not told you should give additional interest of 0.50% or 0.75%, or you should not give interest, you should not give 1%. Nothing they have told. Banks can offer, that's all they are told. If a bank feels that they will not give any additional interest to senior citizen, they need not to give. So don't be under the impression additional interest for senior citizen deposit is uniform 0.50% for all banks, all tenors for domestic term deposit. It varies banks to bank. In some banks, additional interest will not be there. In some banks, it may be 1% or 2%. What Canara Bank says. In the last 1 or 2 years, last 1 year, Canara Bank has been giving additional interest to senior citizen deposit 0.50% irrespective of the amount, irrespective of the maturity. But recently, in the last 1.5 years, it has underwent a change because RBI has given the discretion to banks. What Canara Bank is telling, we are offering 0.50% additional interest for domestic term deposit of less than 3 crores for 180 days and above only. So, if the deposit amount is less than 3 crores and if the period is 180 days and above only, we are offering additional interest to the domestic term deposit to the senior citizen 60 years and above completed 0.50%. Let us assume last year a person has opened a deposit for 5 years. So at that time, his date of birth was not completing 60 years. His age was only 59 years. So you are given a rate of interest without at that time. What let us assume additional interest is permitted 0.50% for more than 180 days. So he has opened for more than 180 days, but his age was not 60 years. Now this after one the deposit is open for 5 years. After 1 year, his age has crossed 60 years. So system will automatically give that additional interest which was prevailing on the date of acceptance deposit. At the age of 59 years, that is the additional interest for senior citizen if it is available 8.50%. Now after 1 year, when he completes 60 years, in Canara Bank, CBS will automatically increase the interest rate, whatever you are giving, 0.50% more. That is because Reserve Bank of India guidelines has told automatically system should give the additional rate of interest for the senior citizen, whatever banks have fixed at the time of opening the deposit when he was less than 60 years. Okay, sir. So at what additional interest Canara Bank is giving? 0.50% additional interest for domestic term deposit of less than 3 crores for 180 days and above. For you have a special deposit scheme as on date 444 days deposit. If it is super senior citizen, that is 80 years and above, we are giving additional interest 0.60% for this deposit only. If it's a super senior citizen, we are giving 0.60. So what I want to drive home is Reserve Bank of India has not fixed what is the additional interest to be given to a senior citizen. Okay, good. Additional interest as applicable to the senior citizen to be extended to the retired staff who are senior citizens over and above the additional interest payable by virtue they being the retired members of the bank staff. So retired members of the bank staff are eligible additional rate of interest over and above to the general public. In Canara Bank, we are giving additional 1% interest for SB deposits the SB account in the name of staff either singly or jointly with the dependent family members, or SB account in the name of retired staff, or SB account in the name of the spouse of the that is deceased staff, or spouse of the deceased ex-staff, we are giving 1% more. Coming to term deposit, normally Canara Bank is giving 1% more for employees and ex-employees or to their along singly or along with the dependents, or if the employees or ex-employee is not no more to their spouse, we are giving 1% more. If the ex-employee is alive and if he is a senior citizen, then for senior citizen, what the additional rate you are giving today? 0.50%. So what is the period? Above 180 days, less than 3 crores. You are giving for a senior citizen, general public 0.50. Coming to ex-employee senior citizen, if he is alive only, not for the spouse. Okay, again keep. If a senior citizen ex-employee is alive, today you can give him the additional interest for the senior citizen, whatever additional interest you want to give, over and above the additional interest you are giving by virtue of he being the employee of the bank. So Canara Bank today, for a senior citizen ex-employee, if he is alive, Canara Bank is giving 1.50 more per person more than the deposit rate available to the general public. So if the spouse is there, let's assume the spouse of the ex-employee or the spouse of the employee, the deceased employee or deceased ex-employee spouse will come. As long as the employee is alive, as long as the retired employee is alive, they should be the first name. Then only declaration has to be given. They should own that deposits only will earn additional interest. If the employee has died or the ex-employee has died, in the name of the spouse only, you can open the account and you can earn additional interest. Let us assume an ex-employee has died, so the ex-employee, that is spouse, has opened a deposit. Let's assume the spouse of the ex-employee or ex-employee senior citizen, whomsoever it is, the spouse's age is 60 years and above. So when the spouse age is 60 years and above, you cannot give to the spouse 1.50%. You can give to the spouse as applicable to the staff. It is 1% more only you can give. That point you have to do for your regular day-to-day work also. So we offer 1.50. How much we are offering to ex-employee senior citizen? For general public, 0.50, more than 180 days, less than 3 crores. Here, this 1.50 we are offering to the ex-employee senior citizen, irrespective of the period, irrespective of the size of the deposit. Let's assume I am an ex-employee senior citizen. I am opening a deposit with you for 30 days. So what is the card rate? Over and above that, you have to give me 1.50 more percent more, irrespective of the amount of the deposit. Even if you give 10 crores, you have to give me additional interest 1.50. Whereas if it is a senior citizen, only general public, only if the amount is less than 3 crores and the period is above 180 days, you will give that additional interest of 0.50 as on date. That you keep in mind, sir. Okay. Now let's quickly see the question. So you'll get an idea. So we'll finish off the session in another 15-20 minutes. So then, okay, this we have seen. Okay, so question number 9. As per RBI guidelines, banks, as per RBI guidelines, one minute. Question number 9 we are seeing, as per RBI guidelines, banks to have necessarily permit premature closure of term deposits accepted from individual, single or joint if the amount is rupees 1 crore and below. If the amount is rupees 1 crore and below, necessarily you have to permit. Question number 9, answer is B. Question number 10. What is the additional interest that can be offered to the domestic term deposits of senior citizen by any bank in India as per RBI master direction on interest rate on deposit? Additional interest that can be offered to the domestic, so additional interest to senior citizen only for domestic term deposit as per RBI guidelines, 0.50, 1%, 1.50, none of these, none of these. Reserve Bank of India has not told how much additional interest you have to give to senior citizen, discretion of the bank. Question number 10, answer is D. Question number 11, to earn interest. Question number 11. To earn interest on NRE term deposit, the minimum period is, to earn interest on NRE term deposit, the minimum period is 1 year. For NRO term deposit, it is 7 days. And for FCNR deposit, it is 1 year by any bank in India. Okay, so to earn interest for domestic deposit 7 days, NRO deposit 7 days, NRE deposit 1 year, FCNR deposit 1 year. If they are closed before 7 days or before 1 year, no interest will be paid. So for minimum NRE term deposit is 1 year, for NRO term deposit 7 days, and FCNR deposit it is again 1 year. Question number 11, answer is A. Question number 11, answer is A. In our bank also it is the same. Question number 12. Which one of the following interest rates are specified by RBI and not left to the discretion of the banks concerned? Which rate is fixed by RBI? It is not which rate of interest is fixed by RBI. NRE savings bank deposit rate. No, it is not fixed by RBI. It is left to the discretion of the bank. So they only say up to 1 lakh, you have to give the same balance, same interest. That's all. Interest rate is not fixed by RBI. Keep that in mind. The interest rate in Canara Bank is fixed by ALCO subcommittee. Generally, in all banks, board of directors only have the power to fix the rate of interest. So the board of directors can delegate to some other authority. In Canara Bank, the board of directors have given the power to fix rate of interest to ALCO subcommittee, asset liability subcommittee. They are given the power. Okay. So, which rate of interest is told by RBI? Banks do not have any freedom to change that rate of interest. No, NRE savings, domestic, NRO, NRE rate of interest is not fixed by RBI. Domestic term deposit rate, no, it is not fixed by, even FCNR rate is not fixed by RBI. They are given only the upper limit in which you should not exceed. That's all. The rates are fixed by the respective banks only. So NRE savings deposit, no. Then domestic term deposit, no. Domestic SB deposit, no. Loans to distressed persons up to rupees 1 lakh. That is also not fixed RBI. If it is agriculture, based on MCLR, you will fix some rate of interest. If it is retail lending, based on your RLLR. If it is MSME, based on RLLR, you will fix. That also your RBI has not fixed any rate. So the answer for question number 12 is E. So none of these. Question number 12, answer is E. Suppose last time in the exam they put one rate here, DRI rate, differential rate of interest. That is fixed by RBI, that is 4%. For question number 2, 12, most of us will tend to tick D, loans to distressed persons up to 1 lakh. That is also not fixed by RBI, sir. So question number 12, answer is E, none of these. Okay, question number 13, which among the which among the following authorities fixes the rate of interest on NRESB deposit for banks operating in India? Who has to fix? Board of directors of the bank. In Canara Bank, the board of directors has given the power to that is asset liability subcommittee. So asset liability subcommittee consisting of 3 members are given the freedom to fix the rate of interest. So as per RBI guidelines, board of directors are entrusted the power to fix rate of interest for any deposit. In fact, for any your MCLR, RLR fixation, above RLR, everything, board of directors is having the power. Okay. So question number 13, answer is D. Question number 14, what type of FCNR deposits banks in India can open for NRIs? So for what type of FCNR deposit? FCNR deposit only you can open term deposit, either fixed deposit or cumulative term deposit. RD also should not be opened. No other deposit. For FCNR, you have either fixed deposit or cumulative term deposit. In Canara Bank, you are having FDR and KDR. What type of FCNR deposits in banks in India can open for NRIs? Current account? No. SB account? No. Term deposit other than RD? No. Yes, term deposits other than RD. Term deposits including RD? No. So you can open term deposits other than RD. Question number 14, answer is hmm, okay. So you are given, okay, sorry. So it is coming like this. 1, 2, 3, 4, and options are given A, B, C. Okay, A is 5. What is 5? A is, no, for 5 is not there. Okay, A is SB deposit for NI. A is 5. That is wrong. B, 1 to 5 all. That is wrong. C is 4. What is 4? Term deposit including RD. That is wrong. D, what is D? 3. Term deposit other than RD. Yes. Banks in India can open FCNR deposits, term deposits other than recurring deposit, either FDR or cumulative term deposits like KDR. Question number 14, answer is D, because 3 is there, 3 is here. Okay, in how many currencies FCNR deposits opened by our bank? 5 currencies. What are they? US dollar, Great British Pound, Euro, Canadian dollar, and Australian dollar. Answer is A. Question number 15, answer is A. Question number 16. As per RBI guidelines, interest rate on FCNR deposits for 1 year to less than 2 years and 2 years to less than 3 years. Isn't it? 1 year to less than 3 years we saw in the table. So should not be more than overnight alternative reference rate plus 250 basis points. 250 basis points means 2.50%. So question number 16, answer is C. Question number 17. As per HO Circular 690/24, for which foreign currency differential interest rate is being paid under FCNR. I have told you, so it is not for euro, it is not for yen, it is because yen and all we are not accepting, it is not for British pound, it is not for Australian dollar, none of these. Question number 17, answer is E. The correct answer is we are giving additional rate of interest for less than US dollar 1 lakh or more than US dollar 1 lakh. That is only for US dollar. It was 690 interest rate for FCNR deposit from 4/10/2024 in Canara Bank. Question number 18. Differential interest rate for NRO, NRE deposit term deposit can be paid when the amount is dash crores and above as per RBI guidelines 7th June 2024. I told you from 7th June 2024, definition of the bulk deposit for scheduled commercial banks, excluding regional rural banks and local area banks are defined. The bulk deposit is 3 crores and above. So less than 3 crores, one rate will be there. More than 3 crores, one rate will be there. Bulk deposit, non-bulk deposit. For non-callable deposit also, some separate rates are there, which is more than 1 crore. Leave it there. So differential interest rate for NRO, NRE domestic term deposit can be paid when the amount is rupees 3 crores and above as per RBI guidelines 7th June 2024. Yes, answer is 18. Answer is B. This 3 crores and above is applicable for all scheduled commercial bank, including some small finance bank, excluding your local area bank and excluding your regional rural bank. For local area bank and regional rural bank, it is 1 crore and above. Question number 19. The minimum period of acceptance of domestic term deposit, NRO deposit, is 2 lakhs. Of 2 lakhs in our banks is 15 days. I told you less than 5 lakhs, you can accept minimum 15 days in our bank. Question number 19, answer is B. Question number 20. As per HO Circular 97/2024, sir, this is the circular prevalent in our bank today. HO Circular 97/2024, interest rate for domestic and NRO and NRE term deposit. Okay, both callable and non-callable. For bulk deposit also, circular underwent a change. As on date, HO Circular 97/2024 read along with 435/2024. What is that 435/2024? In 435/2024, bank, as per RBI guidelines, bank has told bulk deposit should be 3 crores and above. In HO Circular 97/24, if you see, the interest rate is for bulk deposit 2 crores and above. That is changed in 435. When the bank has issued the 435, bank has told bulk deposit in the HO Circular 97/2024, instead of 2 crores and above, you have to read it as 3 crores and above. That is why I have put both the circulars. I have given you only few circulars. You have under 3 weeks time. Please go through it once. You will get a clarity on that. Any doubt you have, you can post it in my WhatsApp to me. As per HO Circular 97/2024, read along with 435/24, branches desirous of accepting deposit of rupees 3 crores and above to less than 10 crores with preferential interest rate, permission from whom to be obtained. I will explain to you that PowerPoint. You will understand a clarity. I think with that, I will close the day today. So now in HO circulars, you are giving rate of interest for that is less than 3 crores and above 3 crores. Okay, less than 3 crores, above 3 crores. So you have a slab less than 3 crores, then 3 crores to 10 crores, 10 crores to like that you are having. Okay, now bulk deposit means single term deposits of 3 crores and above. In HO circular, for all the amount of the deposit, interest rates are given either for bulk deposit or non-bulk deposit or callable, non-callable interest rate are there. But even though interest rates are there, before accepting the bulk deposit, you have to get permission from somebody. Again, I repeat, even though interest rates are available for all slabs in the circular, irrespective of the amount of the deposit, either bulk or non-callable, before accepting a bulk deposit means for 3 crores and above single term deposit. Before accepting a bulk deposit, permission has to be obtained from somebody. When permission to be obtained, when permission need not be obtained, even though interest rates are given for the bulk deposit. If the bulk deposit to be accepted is 3 crores to 10 crores, 3 crores and above is a single bulk deposit, either 3 crores or 10 crores, interest rates given in the circular can be paid to the party without getting any permission from anybody. On the other hand, for 3 crores to 10 crores, if you want to give a higher rate of interest, then permission to be obtained. I'll explain very clearly. Keep that in mind. 3 crores and above is called single bulk deposit. If the deposit is 3 crores to 10 crores, even though rate of interest is given in the circular, if you are going to give that circular, no rate as per the circular, no permission from anybody to be obtained. You can give the rate. But if you want to give a more, because Reserve Bank of India has told bulk deposit of 3 crores and above, differential interest rate can be paid by the bank, isn't it? So if you want to give a differentially higher interest as compared what is given in the circular, then you have to take permission from, say, bulk deposit of 3 crores and above, but less than 10 crores, branches can accept the deposit at card rates without anybody's permission. That is card rate means given in the circular. Same thing you see. Bulk deposit 3 crores and above, but less than 10 crores, the same slab. 3 crores from less than 10 crores for preferential rates to be taken up with to integrated treasury wing through circles. So 3 crores to 10 crores in the circular interest rate will be there, bulk deposit. If you want to give the interest, you give it. If you want a higher rate, party asking for a higher rate of interest because party knows bulk deposit means 3 crores and above, banks can give different rate of interest. If the party asks and if you do not want to lose the party to give a differential rate between 3 crores to 10 crores, you have to take up permission from integrated treasury wing through the circles. Then all other bulk deposits 10 crores and above. For all other bulk deposits 10 crores and above, all branches cannot accept the bulk deposit of 10 crores and above. Those branches have to be got designated by S and R wing, strategic and resource wing in head office through circle office. Any branch wants to accept a single bulk deposit of 10 crores and above, all branches cannot accept. Only designated branches in the bank can accept single bulk deposit 10 crores and above. As per HO Circular 521 bar 21, as per HO Circular 521. Okay, so now who designates a branch to accept a bulk deposit of 10 crores and above? That is head of, that is CGM or GM of strategic and resource wing. Through circle, they will permit the branch to accept a bulk deposit of 10 crores and above. For 10 crores and above also, interest rates are published in the circular. So if a branch wants to accept, designated branch wants to accept a bulk deposit of 10 crores and above, even though they want to accept at the card rate given in the circular, they cannot accept without getting permission from T&I division, integrated treasury wing Mumbai through resources section of the circle before accepting the deposit even at card rates. So 3 crores to 10 crores, if you are accepting on card rate, accept it, no problem. 3 crores to 10 crores, if you want higher rate of interest, get permission. 10 crores and above, only designated branches can accept. So designated branch, if you want to accept, even at the card rate given in the circular, so you have to get permission from these people. If you want to give more interest also, you have to get permission from these people. So let's see the list point and we'll wind up for the day. So see, so question number 20 and 21 we'll see, sir. As per HO Circular 97/24, read along with 435 by 24, branches desirous of accepting deposit of rupees 3 crores and above to less than 10 crores, 3 crores and above less than 10 crores with preferential interest rate. So rate are given in the circular. If they want to get preferential interest rate, permission to be obtained from whom? No need for permission. That is wrong. From resources wing, that is wrong. From integrated treasury wing, yes, the answer is question number 20, 3 crores to 10 crores. If they want to give preferential rate of interest, get permission from integrated treasury wing. Single bulk deposit, question number 21. So question number 20, answer is C. Question number 21. Single bulk deposit of rupees 10 crores and above to be accepted by designated branches. Only 10 crores, only designated branches as detailed in 521/21 after getting permission. So even at the card rate, if you want to accept a deposit of 10 crores and above, you have to get permission from T&I division integrated in Mumbai through resources section of the circle office. Question number 21, answer is A. Okay, sir. Other questions, maybe around 60 questions are there. Remaining questions I'll try to finish in 1.5 hours next session. I will go to the OTS policy of the bank. Thank you very much for your patience hearing. All the very best. We will meet in the next class.
Sir, good afternoon.
Good afternoon. I concluded the class.
Okay, sir. முடிஞ்சதா term deposit you could complete, huh?
இல்ல டெபாசிட் நான் 25 கொஸ்டின் நான் முடிச்சிருக்கேன்.
Okay.
I'll finish next one. Not a big thing. I'll rush through in the next one. Then I'll take the OTS policy next class.
Okay, sir.
I'll upload the OTS policy today.
Okay, sir. Thank you, sir.
Any doubts they are having, they can put me in WhatsApp. You can give them my number to them.
Gaurav, Mr. Gaurav, you can send to his WhatsApp your queries. You have his number, sir? Okay. So 12th question.
For the previous, what do you say, class question paper with answers, I will give today. Hello?
Somebody wants your number.
Again, okay.
I'll
So that is the credit matters updated along with the question paper. Answers I will upload today.
Okay, sir.
The paper is over. I will upload today. Thank you very much. I'll
Thank you.
close. Hello? Hello?
Tomorrow morning, Mr. Jagannath's sir's class is there. Next class at 2 o'clock, 2 p.m. Mr. Chandrasekhar Reddy sir will be taking the session on important credit policy. Please do attend. He has prepared more than 90 pages material which we have shared. So it is an important session. Next session link is available in all the WhatsApp groups. I have shared the WhatsApp, that is a mobile number of Mr. Jagannath sir in the chat box. You can note down. I'll share the next class link if any one of the participants is not having. I'll share it in its chat box itself. If you are not having the link, you can copy it. Yeah, credit policy 59 pages maybe. That is the material shared by Mr. Chandrasekhar Reddy. He will be taking his class in the afternoon. Please, so whoever wants to attend this class, quickly finish your lunch and come back to the class. We'll start by sharp 2 o'clock. All materials are shared in the group, sir, and recordings will be shared in the group by evening. Okay. So I'll close this session for the present. Please join, do join after the lunch. Thank you.